Yes! Hello! Welcome to the Tradespotting Show. Number of minor delays kept us back 11 or 12 minutes, but I've been sat here for about an hour trying to get this darn thing. Anyway, you don't care about that. Hello and welcome back to Tradespotting. It's Tuesday, and we're doing earlier shows for the next wee while because, well, a lot of major indices put in lower lows on the monthly chart there recently. It was a bit of a flash crash across the board, but we've been talking about it since the highs on SPY and Bitcoin, and we've kept everything pretty straight and narrow on GME and AMC. So we're ahead of the game, right? Here's the charts. This is Bitcoin. It's interesting because it's currently open, and we'll take it down to 15-minute time frame. See that in these 15 minutes, I know this is very small here, right? Pardon me, but I want all three of them at the same time, right? So just deal with it. There's 200 period moving average. You're below it. The 50 simple's going below it, and it's been in a downtrend with lower highs and ostensibly lower lows, right? I mean, here's a higher low, sure, and here's higher high, sure, and that's higher high, sure, but it's bearish divergent, and then price action has been putting in lower highs. This is a horizontal level of support. It might be a descending triangle. You know, the breakdown from it within this formation, likely from the broad to the lowest point of it, you'd find, as the volume comes in, you'd find a measured move implied target would take you to the bottom of this range. It might be back around 37, 36,000 if it breaks down, just to stay within the formation, right? So that's quite a big chunk on price action. SPY, it had a very positive reaction on Friday from that low. Overall, it was a positive day. On Monday, like the low after Friday, the reaction. Anyway, whatever. Monday was a positive reaction. A number of us predicted it, but that's partly because we'd put in a new monthly lower low. And so all the people who had refused to listen to me, now there's one particular individual I mentioned recently, he refused to listen to me at the top, and he got other people lost the money. And then price action gets down to these lows, and there's this classic person, right? They're the FOMO bear. They're actually bullish, but they're not very good at TA, and they put themselves in their own position in danger. And then when price action gets to a monthly low, they panic. They reorientate, because at this stage it's gone beyond all psychological tolerance levels. It's way terrible for their account, and the only way to stop themselves completely ruining their life is to cover, right? Because they've got no idea what's happening right now. They're totally destroyed by emotions rather than the actual charts, which are quite simple. But because the danger that they've put themselves in, that danger, despite its low probability, and it's very low yesterday that we were going to keep going down, it's very low, that tiny possibility is so very fucking dangerous to them that it plays a larger role in their decision making than it would do if they were trading sensibly. And it ends up adjusting their own, right? They live in that toxic swamp of their own mentality. Get out of my face. And right, it festers, and they end up changing their own psychology with regards to trading. And this is the sort of thing that happens to people who trade emotionally. Now, it's not just the individual trade. It's not just managing risk on individual positions. It's your portfolio and your personality as well. And this is a very important part of risk management. And trading and technical analysis, it's about deriving the most likely probability, not about making it as simple as possible, right? That's something I try to do to help people, but it isn't your objective, isn't to simplify, right? That will, you'll need a degree of simplicity in your edge in order to be consistent, and that's a central tenet of being a successful trader, is this idea of consistency, which you'll be able to apply if you keep things simple. But technical analysis isn't exclusively this idea about simplifying price action. That's silly, right? The process simple itself is very, very simple. Anyway, so SPY, 414 spot 48, you've got pot 96 at post-market pricing. And the way that SPY, price discovery works is, on this thing, is that the large institutional players in pre-market right now start loading up their inventory of shares that they can use later on in the day, auto-locate that, and manage their trading position throughout the day. And then at the end of the day, there'll be another period of price discovery when the markets are closed, And I think it's not tomorrow, Bunsen, but if it is today, let's check it out. And then you come out of the closet, Jerome, come out of the closet. Anywho, I'm having the camera. I am, and the audio's working. It is, and the charts are there. Cool. And Bitcoin's still not doing fabulous. It's buy not open, GME, obviously, right? We'll get into that in a second. So what was I talking about? So you have to be aware at all times of all possible implications from the technical analysis, right? And a lot of the FOMO bears, I mean, Bitcoin had the weekend relief. Rocky often talks about this idea of the weekend relief you get on Bitcoin immediately after a huge move. And there's two considerations. With Bitcoin specifically, if you're trading Bitcoin over a weekend and it's just had a massive drop, you need to double check with the CMEs, right? It's the futures chart, right, on Bitcoin. They drive the market. So, for example, the CME charts, right, they closed at the weekend. They didn't have a lower low, right? They didn't have a lower low. At least they weren't in the run up to it. They didn't anyway. And so this idea, right, like weekend relief, and Bitcoin's had a chance to it's had that weight pulling it down. The CME charts have been closed. Price action, be it Bitcoin, had a positive reaction, and then we're opening up now Monday. Everything's starting again, not just CMEs, like that's already obviously, but the markets as a whole. So you're going to see some implications here. Price actions, obviously, like in a bit of a decision stage, and then a SPY, similar, but you've got market makers manipulating everything, and a much bigger, more liquid asset here in SPY, and then GME, right? Over to GME, that's the 1 hour time frame. We can see that we had a really positive reaction from this low in at around 112. That was where we predicted price action will get back to for a while now. And anywhere from around that level down to 108 or something. Yeah, there it is, 108. That's this liquidity zone. We've spoken about this for absolutely ages. And then we got there, and as soon as we touched it, we got a massive reaction. Extreme in terms of the volatility that was going on at the time, even though that itself was above average. Average true range there, you can see you exceeded it in that one candle. Very positive reaction. It looks like a rejection from this area. But what did we not do? We failed to break it back above 120, which, would have been what we were aiming for. If you take it from this most recent high, that's the top of this move. You can see that you've got considerable distance to go before you make it back above a 236, up around $135. You know, that is just to define this area as a local low within this part of this total trend from the top to the low. There are other areas you can do it from. For example, this breakdown point. And here, when you drop on, you can see you only really made it back to the 236. And then there's a bit of a wick there, which you would also consider a rejection. In totality, though, that hourly candle clearly bullishly engulfing over a number of candles there previous, like the 3 previous. So the totality of this breakdown formation back up to your level of resistance, as well as the 236, 8 exponential period moving average. And this is a good place to judge GME's price action short term right throughout the day. If it makes it back above 123.70, you push up towards 131. At that stage, there'd be a lot of tough resistance, I'd expect. And then your greater 236 that we talked about, 133 up to the golden pocket, 140. Getting past that today is going to be like really, really tough, especially with what we're considering happening. Is it Jerome's day today or tomorrow? The 4th and 5th of this lovely month. 3rd Tuesday, 4th Wednesday, Thursday the 5th. So these are important days. These are interesting for price action. What's the time? 14:21, right? Excellent. That means good morning, everybody in America. And we're going to keep all 3 of these on the charts, are we? Well, we don't need to keep Bitcoin open right at the first instance. I don't think it'll have a drought. I mean, I'm not going to make predictions here about what's going to happen in the first couple of minutes to Bitcoin based on the things that I've just been saying about SPY. That would be a bit daft. We could get other things up, like, for example, if you are like myself and you're a trader and you trade lots of different things, and you'll be aware of the potential change. You perhaps, if you are like me, you'll be aware of this idea of the rotation, like the risk rotation. Money moves between various markets depending on the risk profile at large, and you'll be aware maybe that the Dow Jones Industrial DJI, it's got defensive stocks in it. It's got it's all about the dividends, high yield and dividend stocks. And so it's like a defensive inclusion in your portfolio. So And there's this concept of rotation, rotation out. So like risk would be on high growth companies, which is associated with technology companies. So there's that, right? There is obviously the same thing, you don't have to be a tech company to be high growth, but this is the implications, right? You're greater exposed to oscillations and risk in the market if it's a lovely breakfast there, Bunsen. That's so what am I talking about, right? DJI, yeah. So depending on what you're at, like SPY is one, it's the top 500. Then you've got DG, you've got Nasdaq, you've got Nasdaq minis. It depends what you're trading and what you're looking at, but like the risk did change there. So maybe you were in DGI, maybe you're looking at that sort of thing. In which case, I suppose we could have a quick look. But the markets aren't open and it's a little bit slower, so let's not bother. What else? The AMC, let's look at that instead. Say, well, rank down from there. Make that slightly easier. Log myself up onto AMC so it's less. Ugh. Right. In context, right? Maybe we would have anticipated that. What is going on there? Anyway, right. So, yeah, we're going to do the same thing with this. I mean, we could take a Fibonacci from various levels. This is quite a dramatic and obvious trend without much departure from the initial direction there at 1782. That would be your first port of call should you go to the top side and then breaking back. It's not going to get anywhere near the golden pocket in the short term, but there it is there. And $20 is also resistance and a Fibonacci level. It's also now above the 200 period moving average. On that 1 hour, on the 4 hour, it's at the 382, and the daily time frame, where is it? 786. So this looks to be the Fibonacci to rule them all for the next wee while, and I suggest that the hard range top side would be in at around 24. That would be extreme price action taking you back above 20. I don't see that in any short term, and talking about that before you've even touched the 236 is stupid. So, and then this in context is a failure and a rejection. And then you've gone so far back against the trend. So if we were to take it from this low and say, how far have you exceeded the 786? Have you tested the 886? This is the low here. This is obviously the highs predicted in advance of it happening. Here's the 786. You've gone beyond it. Here's the 886. If you break below this 886, it's just very, very, very close. Then you'll head straight down to the next target, which could be as far down as $11 and change, folks. We're saying 11.47 to 11.55 is next place where you might see a slowing of price action and this trend begin to be arrested. Currently 15.26 and 7 cents down on pre-market. Interesting information there. Quick check in with Hood. It's had a similar reaction. Since its negative earnings came out, it's had a contrary reaction. We can do this, right? I mean, this is the entirety of Hood, so it's a total piece of shit. There's your reaction at the 236, which is like a nope, not happening. I mean, you would have hoped it, it's a piece of shit. Anyway, we actually be bothered, right? It's just like also now getting to the point where you can't short it, and it is a piece of shit. So why would you go long? We'll just skip that. 199.46 on Netflix at 4.78%. Dodgy area here with a gap. See how price action evolves. Obviously, this will be heavily dependent on what happens in SPY, which we've got now 4 minutes until things start kicking off, folks. How's everybody? Rubdix. There you go, Rubdix. ER, it's not quite, maybe the cousin of. Here, did we say this was going to do really well? Somebody asked me for a frickin' thing on it, and I probably talked about it. I'm sure I did, because I remember somebody asking me about it a lot. And it's done well. Where have my drawings gone? Who knows? There's your golden pocket. There's the top side of it. Yes! Look at that. Fucking beautiful. Congratulations to anyone in this. This is fucking awesome. Look at that. Holding the 236 there. Right, you broke your previous level of resistance. You came back down. You held the 236 of this Fibonacci. This is on the daily time frame, so it's like no pissing around. And that you went to the top side of the golden pocket, back through the 200 period moving average, even though every EMA had a negative slope display. Anywho, that's just what any indicators, just like the Fibonacci alone. You could probably have seen some of that happening. You might have been worried about it when it hit the 50 simple and the 382. I would have been very cautious, but then you were watching it. You didn't need to worry at all. It was like a party. And then exactly the same thing at the 246, 200 tournament. Well, again, when you tested the 236, I mean, you'd be watching it saying, what's going to happen? And then it just has like, wow reactions. And you're like, I'm worried, what's going to happen? And it's, wow. Anyway, That's quite extended. You would also have perhaps suggested at that point there, that higher low, especially when you went through that high. Anyway, things looking good there. And we could do it in different time frames and look a little bit more at it. What time is it? We're opening in 3 minutes. There's, let's have a wee look see, right? I mean, you've gone back above the horizontal looking left, but you've got a potentially, you've got a bit more, and then some, really, to be honest. So here's your 236. You don't want to price action drop too far below that. What's that? Is that the line of price at the minute? Yes. That's a pre-market pricing. Let me drop this on. So pre-market pricing, right? You're back 60 cents. That's nearly 10% on Redblocks. But then yesterday you were up 42.64%. So I mean, do you care? You probably haven't bought it this morning. So unless you've gone crazy on a BKR or something, but don't go crazy. And there's your 236 retracement back there. So it's like you open up with a gap and a retest of the 236 and the exponential moving average. Then the opening true range will probably go back up through that gap, maybe then continue on some more. And the next stage, top side, would be ridiculous. I mean, this is like very speculative TA right now, but let's say that you did that there and then you'd be aiming up for it at $14 or something. That'd be 100% on price action. Is that going to happen? Oh, it'd be fun if it did. Let's keep it on the charts and stick on another one. Oh, look, there's 4, but these are very skinny. But that's okay, right? Have a cheeseburger charts. Did you know? Have a cheeseburger charts. Right, so get my face accumulation distribution. I know what they're saying. Shut up, but I don't need you indicators and don't need you at target volatility profile because I can see on charts you're up to freaking volatility freaking charts right there. Okay, so UAC. Why is that? How did that manage to get on? Anyway, UAC managed to make it onto the charts. That's interesting. Back to GME, if I can spell GME. How do you spell GME again? Right. Ha! That's not GME. Why do you, there it is, 118 at pre-market pricing, down 1.31%. Let's keep this on 13 minutes. Got 1 minute until open here. This will be interesting. This is Rodblocks. We'll keep it on the, fuck it, we'll put it on the 1 minute. We'll put everything on the 1 minute, because why the hell not? Whoops, that's not what I wanted. Undo that. Authentication that. Here we go, folks. The markets are open. The markets are open. There's DME. We'll get it down to the 1 minute, see if anything actually happening. Not the stuff we were wanting, but what we perhaps anticipated. Here's a huge gap down. This is what we talked about on Redblocks. There's the 726, get a bounce in around there. Is that it? That's that line? What is that line that we drew there? Anyway, that's some line on Redblocks, and there's a 236. It's beyond it. There's the gap above here. Oh, interesting. Do you bounce? That's the place to fill. There's the top side of it. There's the bottom. I could put in lines, but they're all pretty obvious. Then here's SPY. Not all that exciting yet. Let's see what goes on. Volume yet to register much. Give it the first minute, though, before you see that coming on. And then Bitcoin. Bitcoin is retracing. The Bitcoin is going down faster than all the things. Well, look, you don't get anything when you stretch this out. Come on. There's your gap. 15 minutes, not very much. This is bullish information so far. You could obviously roll over and change off very quickly. In terms of the Bollinger Bands, which are on these here, you can see you're above the basis line, and that's low in the context of a downtrend. You've had one rejection off the top side, and maybe you're looking to hold the basis line at 116. You've got your parabolic ACR. You can see that the trend would change around 14.16 until such times as price action gets back below 116 and then perhaps touches a parabolic ACR. I'd say you're in a slow trudge to the top side with that little gap. And then the reaction now on Rubik's, it's right, it's the cousin of the frog. Maybe this is the toad. And then over here, SPY, bleh, right? Not very much in call volume still. What does that mean? What does it mean? Well, you're still not enough to register. Well, you should have seen something. 1732. I suppose if you were at the bank right now, you'd have. Anyway. Bitcoin 38.3. It held this horizontal so far, but I don't put much faith in that. We'll take that down to the 1 minute time frame because at least we'll get to see some juicy candles there. SPY, we'll keep that on the 1 minute because, we'll act like it's exciting even if it isn't. Oh my God, come on, SPY, it's so exciting, oh my God. You're not saying it all, you're just being crap. So people ask things like, Tradespotting, will you cover SPY some more? And you certainly bet I can do 100%. For sure. A lot of it we've done, Rocky and I have been on the course, So if you're doing the course and you're like working through different sections and that, and then you see this chart with like all of the lessons you've learned before, like going, that's SPY. And that, and like you'll see, like, oh, they predict this. We did it at the time as SPY was all evolving, it was to prove that it works now rather than like 200 years ago TA, which a lot of, aside from ours, the best ways to learn out there have got these huge flaws where they're like, here's an example of exactly what we're talking about from 1729 on cotton. And you're like, huh? Anyway, but that's still like, it is what it is. Look, that breakfast has got even better. Oh my God, look how good that breakfast is. Oh my God. Right. So the very simple went through the 200 on the 1 minute time frame. So, SPY all in. And then Ribix, it went back up, didn't fill its gap, and it came back down towards this horizontal level. So, I mean, it's up to you, right? It's either going to be amazing or ruin your life there. And then GME, they'll like do nothing. Like we said, there's this slow trudge to the top side, probably fill that gap. Has it done it on the tinny time frames? There it is, doing it. Awesome. Well, it's not that slow. And then we'll see if it continues to top side after that, right? Test the Bollinger Band at the top side, come back down here. That's a lower low in the formation. I'm not particularly impressed by that. But then, in context, it's like fantastic, and you can have retraces. You can have the old retraces. This is not fantastic, right? Come on, this is it. You've opened there. You're at the top of the basis line. Come on, push on there. Just do it on big chunk. SPY's going up. What's your problem? 415 spot 51. We're up 0.27% on the day. So there's like probably people like starting their streams to talk about how SPY's going to collapse. People, and saying, look at Bitcoin reaction there. Fucking look at that reaction, by the way. Tradespotting lines. Jimmy, you're on early. Yeah, yes, Eric, I'm on early. I'm making breakfast noises there. Did you hear them? So, and that's what they were. And then there's the part of look, it's there 119.50, or price action's 119.50. This is at 119.93. Another 40 cents. Push up there and that'd be positive. Then you'd go on and touch the top side of the Bollinger Band. SPY continuation. Let's get some. Shall we crack them out now? No, let's go for the favorites. It should obviously default to my favorites. It's Lunatics. This is Rocky's indicator here. Yeah. And if I ever see anybody share any of the code that Rocky's put into any of these things, so that it just whether how Rocky decides to distribute and who he gives his work to and all the effort he put in over years and years to develop different things and write code based on top of it. If I ever see anybody sharing that content anywhere in the world and that it's not Rocky's permission for it to be distributed, I'll sue you. And I've already started proceedings to do that with a complete fucking wanker. I'll sue the shit out of you. You'll lose all your money, you'll ruin your own life, and you'll feel like a fucking idiot when you're mature enough to see what you've done. And thieves will not be tolerated. Right, so excellent. We see that you've managed to get towards the top of the bearish control zone there and then get knocked out of it. That's not fabulous. On the 1 minute time frame, you're not going to get a great picture. 15-minute continuation of that same theory. Let's keep going, guys. You're above your own moving average and then went straight through the center line. Did it quite strong. There's another strong, talking about strength, there's the volume at that, and then continuation from that trend. Hitting the 200 period moving average, like dink donk, that's interesting. Just quickly get this full screen for a second on Bitcoin. Take out this Fibonacci. That's an extension beyond this low. That's a good recovery, but is it a recovery? It's not really, what's it, golden pocket and then some. Top side of the golden pocket is all you've made it to so far. Rejection from the 200 period moving average. Looks good for a second. You got to pay attention though. Is this a reaction? Is this a reversal? Back below the 8 period moving average on the 1 minute time frame, so not exciting in immediate terms. Anyway, is that 236? Why did I mark it on yellow? There it is. SPY 413.91. Oh no. What? 50 minute time frame. We've had only one close so far. Two 15-minute closes. We've had 2 trade spotting Egypt. So far, so good, right? So far, so good. Bitcoin is in flux. It doesn't know what to do. It's like, tell me what to do, which is exactly what people will do. They'll tell you what to do right now. Get above that 8 exponential moving average is what you should do. Spy's managed it on a 15-minute, 1 minute. He's still catching it, still got it there on a 1 minute. Let's stick on the 1 minute, and we'll put our emphasis on the 8-period exponential just to see what's going on. Obviously, you're a little bit further down there on red bricks, but it opened down and had a gap. And like, it's different from the other two performers, which themselves a little bit more straightforward. GME here back at 118.24. It's bouncing around a lot. Came back up. I mean, is that gap filled? Close enough. It's near enough on that stage. It's a 1 minute gap. 15-minute time frame. What does it show us? No gap at all. Again with that lower close. Rejection wick from going back up here. At this stage, you'd be worried about how much this is going to retrace. You're through the basis line. You've had one touch towards the top side of the Bollinger Band since then. How far have you come back from this low, which you'll have to make more accurate because that wasn't spot on. This is your 236. Got resting on the 382 at the minute, so you've not gone through it with pace. But arg, it just started happening. Arg. And there's your golden pocket. If GME doesn't get a big back to the top side, it might be. Oh, I'm moving the mouse on and trying to drop the lines. Come back, mouse. Hey, mouse. Right there. So that's the golden pocket where you might be looking to. You got rejection from the 236. So there's that. Red books. It wants to come up and fill this gap. I mean, you can tell obviously that that's got an effect on psychology of market participants. And here is SPY, the 1 minute. You're going to hold that 8 exponential or what? I mean, you can see down here, right, like how it reacts when it does. And just now doing that there. So see, obviously you've got this previous area before the breakdown, and subsequent to that you had a higher high. So this could look like a downtrend. Here you've just had a higher high and a retracement to this previous area. Let's see, right? This would be where you'd want to get back up again and test, obviously. And could be then a rejection level where you see lower high. Do you want to drop the line when I ask, computer? Anyway, you've had the 50 simple go through the 200 period moving average. No way, they starting work again already. I thought the earlier shows would get around that. Anyway, 50 period moving average has gone through the 200. Not had any test of that since that's happened, obviously. It's quite far away from price action. 200 exponential above you at 417. I mean, that's probably the daily high. Should it push up there? Bitcoin still struggling to hold that 236. It's different inflection, and that might speak to the fact that things aren't going to push up higher. Is there the energy and enthusiasm? We're only 40 minutes into the first crazy hour. Greatest community and love Jimmy and Rocky. Yo, Cobalt Miss, thanks so much. Member for 2 months. Congratulations and welcome to the Yellow Headband. It's great to see you and love those sunflowers. Xavier Crack Rock, 7 months. Yo, buddy. Chimp. Oh, hey, I got one also. Damn, Doomslayers will not be denied. Doomslayers will not be denied glory. Crack Rock. Thanks, buddy. How you doing? Good to see you. Great to see you. Great to see both of you. Stally, there you go, Jimmy. I love you, bro. I love you too, Stally. You're a great guy. I'll give you a big hug if I could right now. Oh my God, Spy. What? It's just like real what? Yeah, what? Hey, I fucking love this job. Hey, trading's the best, right? Trading's the best. So, Spy, 414, still there. It's not done anything. That's so exciting. You make it fun. Hello, Brandon. How you doing? And he's saying hello to everybody. Welcome, Brandon. I love this chart screen trades one. Tell you with the skinnies. With the old skinnies. This because these like, you know, it's like those slim cigarettes you get when you're on holiday in Greece and that. And you're like, these things, no, what? That's terrible. No, don't. That's bad for you. Anyway, yeah, no, these skinny charts like that. It's like they're what are they like? They're very elegant. It's very elegant, and it's even kind of what is it? It's a little Art Deco somehow. We don't need all these extra indicators, do we? I mean, we'll keep them on because why not, right? And then, yeah, good morning. Good morning. Good morning. Yes, Ethereum down to yes, little bits there probably. I mean, it'll be like, well, what's the overall altcoin market doing? So can't add any more on. This is already so many. Jeez. Doing good, Tradespotting. Looking forward to another day. Hope you are well. Wow, lovely message. Thanks, Kim. Hope you have a brilliant day. There's Justin. He's such a good guy. Justin, you're doing very good. Justin's good, you know, Justin's learning and... You know, also, you know, there's like different people ask different types of questions. Like some people ask questions when they're like I'm talking about people on the course, but like anyone at all, you know, ask questions when they're struggling or whatever. And other people ask questions like they're not like I mean they are questions, but they're like you know Like, it doesn't very good at saying, am I doing it right? You know, it's this phrase. And like, it's kind of funny, right? Because, you know, the memes and all the rest of it. But also, it's trading, so then it's extra funny. And then it nearly generally is, right? It really is all doing it right every time it's in that. And it's like, it's interesting. It's great to see as well, you know. So keep it up, Justin. Thanks very much for messages. And I'll always try to be as helpful as possible in the replies. So Bitcoin, you know, it's bouncing between these levels, right? That's great. Those lines look good. See how that goes. I mean, it looks like it's breaking down, really. This is what Rocky calls the heartbeat pattern, as well as the fact that it went through some other technical artifacts and managed to bounce at certain areas and whatnot, and it could just easily be somebody repositioning. Here's this SPY. Oh, look good. It's done it right in front of our eyes. It's gone back up there and rejected off that 415 level we thought it would get to. It has to get back above there, and then we said, what would be the high for the day? Something that, did we not mark it in? Oh, well, that's like stupid. Would have made myself look good should it get there, and I suppose I could figure it out again. And then I could rewind a video. And there's the gap, right? Still not filled it, and it's starting to fall down. You've got a lot of volume at that stage. 1, 2, lower touch here. It's interesting, folks. This is interesting. I mean, we'll just quickly have a quick look at that and see. Yes, as we suspected, folks. As we suspected. Come on, Redbooks. Right, Redbooks. Fucking, let's do it, Redbooks. The fuck is this? What do you think you're doing, Redbooks? Get up there right freaking now. And it's like, no, I'm not doing it. You know those days, right? You wake up. I mean, it's happened, not happened in a long time to me, obviously. But you wake up and you're like, sweet. The day off, you know, or this other feeling, which is even worse, is like, oh my goodness, I've slept in so much that now it's just too late to do that job that I was supposed to be doing. So I'll just go back to sleep. And then you wake up 20 minutes, 30 minutes later, and it's not too late. You've checked the clock wrong or something, and you're like, no shit, I actually have to do that thing. Oh my God. And it wasn't that big a deal until you thought you got away with it. Now you have to do it. Like, God, that's awful, isn't it? Anyway, that's Red Blitz doing it in a minute. And a little bit of volume there by, what is this 5-minute time frame? That was sweet. What? Hey, thanks. Bang, bang, bang. Yeah, bang, bang, bang. Brilliant. Still there, sitting at that level, right? Daily time frame's not going to give us any extra detail compared to the 5-minute. What was I thinking there? 200 brilliant moving average, 417. Is that what we talked about being a high for the day? It might be a high for the next. Well, Bitcoin's turning around there. It's not great at repositioning. That's falling around, falling down here. No. You had your bullish divergence, but you need to obviously make a retracement on this thing in order to say, like a back above a 236 as well, and able to define this as a local low. And then you can compare it to this low and say it's bullishly divergent because there's two lows to compare to each other. At the minute, that's just one low, right? Because it hasn't gone anywhere since. I suppose if you were to look at it like this and say, like, within the oscillations of the trend, this went and did the 236 golden pocket thing. You know, Tradespotting, what do you mean? It's what you say all the time. And it's like, well, no, it needs to move down distinctly further from here before you can then, you know, and it still has a bullish divergence. It still can be a higher low and oscillator, right? It still can be. And then you have to bear in mind, though, that this was like the open and it was different from price action here and the opening range and price discovery in advance of it and whatnot. And so you might need a number of touches to confirm it. And especially if you're going up to the top side and putting in continuation divergence to the bottom side, like as you did here, price action, pushing way up, but failing to make it back above these highs that it put in earlier. And so, like, right, so you need to defeat that. Bang, bang, bing, bong. Anyway, how come it's taking over the information for today? GME's back down at this parabolic. Look at this. And we're calling this whole thing like consistently all the time. Look, Bitcoin is bouncing off my lines again. Oh my goodness. Do you see like this? If I had this line, this is bouncing off lines. This is the line you needed it to get back above, right? And it got rejected from it. So it doesn't look as amazing, but it's exactly the same. Amazing. And then here's it. Oh, darn it. It got to it. Now it's open and closing below it, which is, again, obvious. It's all in the golden pocket, though, this body closed so far. If it finishes back at 115.94, then that'll all happen. If it doesn't, then it's pushing down the parabolic SCR, and you can see already this big extension. We talked about these levels. Oh, no, my God. Redbooks, come on, man. You've easily got enough reason to turn around now. For goodness sakes, what is this? And then SPY, you're obviously in the perfect place to trick people here. Let's see on the 15 minutes. You know, already been through this at pace, so at any second that could go back. 5 minutes. As your body closes here, you've got a wick below in recovery. See how this goes, right? Important minute for SPY. 5 minutes, pardon me. Bitcoin, not so much. don't see it leading anything at the minute. It's just very reactive. So see, 1 minute left on that. If it falls below here again, then you know what, you're looking to this low. I wouldn't put much faith in it. It's also ready. Get out of the way, you stupid tag. It's annoying when it does that right over price action. I want my skinny charts. I need my skinny charts. 38252. Right, so this is like also, I'm like, you know, I've got Bitcoin positions, obviously, and lots of other altcoin positions, and I try to manage most of it with a hedge, you know, most of it with a hedge on Bitcoin. You can get leverage up the wazoo on Bitcoin, like crazy amounts of leverage on Bitcoin. So it's an effective hedge for your own position. Anyway, it's complicated though, but so don't try this at home, folks. And 36,650 was where I took it off. And a tiny little bit of it back on up there at around these levels. But we'll see how that goes anyway. I'm not telling people, man. It's sharp trades point. Right, so yeah, fantastic. Well, GME, yep, you're playing on your line. Redbooks, you're playing with your lines. That was great. Oh, it did that too. Excellent. And Spy, you've managed to make it to that line, and I didn't draw any other lines, so you don't know what to do yet. I'll draw a line in a minute, Spy, don't worry. And then Bitcoin, you're back at that line again. Right, okay, so everything's got its lines, apart from Spy, who's like, I want my line below, and you're like, yeah, but Jamie, you also haven't drawn a line on GME above. And then we could also stick other things on there, but like, this is fantastic, you know, totally killing it. Here, I can move this down, and then they're less skinny. Get on it, this is it, right? You fat charts, that's disgusting. I don't even know if I can see you charts anymore. I'm sorry, charts, things have changed. Here, look, Bitcoin's saying the same thing. Sorry, I'm way off, I'm leaving the charts. There's not enough toppings. I need some more toppings. I'm away. And is it toppings? No, that'd be the opposite of toppings, wouldn't it? So this bad news there on the old Bitcoin front, temporarily, right? I mean, it's not bad news, but it's breaking. Oh, I didn't mean to do that. Anyway, there's the hourly on Spy, and you can see this tweezer bottom. Pardon me, it's not quite in place yet, and you're held below the 8 exponential. That's negative inflection, right? Pardon me, don't know why I'm doing that. And then this must be dying or something. There's the 15-minute. Right, that's in the middle of the breakdown. There's 1 minute. It looks very similar. Looks very similar indeed. Right, it's lower low, it's higher low and oscillator, but it's in the bearish control zone. This is got back onto the 1 minute time frame. What, are you having a reaction yet? Out of the bearish control zone. Good to see. Let's see that. Come on. The 8 period exponential. Come on. This also 8 period exponential 1 minute is managed to stay above it. Bitcoin, you know, the Spy's above it. Like, Bitcoin, what are you doing, right? It's panic merchants over here. For goodness sakes. And then Rubik's. It's like, it's a bit of a toad. Rubik's. You've got like this, but also you've got this weighted down. Come on! And you had your volume. Well, you'll have had your volume. That was rejected at that resistance level. And see the 8 exponential move its way there. Price action I'd like price action to be above it before the 8 period moved it to that horizontal. See the resistance here. You know, your RSI, if this falls through the center line here again, that's not lovely jubbly, right? It's not lovely jubbly. Lovely jubbly. If it holds the center line, conversely, that's fantastic. And if it breaks through this downward sloping resistance that we see, and it's very, very close to doing it here, and there's a little bit of a decision point in it happening. Now, on Spy, on this 1 minute, and if you are scale pair and whatnot, you'd be looking at 236, you'd be looking at that golden pocket, and you'd be looking at 1618. And again, that's what we talked about, the 200 period moving average on other time frames. So we'll see how that goes. Look, straight up there, boom, told you. And if you were a day trader, boom, you'd have taken the trade when I said it, and you'd have closed it there, and in about a second and a half, you'd have made some money. Or I would have. Bam! Bam! Oh, right, so what else has the chart been saying? Well, let me see. Tradespotting isn't the Fed at 10 a.m. ET. Can we watch and comment together? Cool. Whoa. Yes, if you send me a link. Well, can you send me a link? I'd have to get one from moderator. They're the only people allowed to post links, innit? Tradespotting, do you ever use Heikinesi candles? I do in strong trending markets, sure. They're quite handy. if I'm like momentum trading short term on a 15-minute trade, right, and it's like something that's in a breakout and pushing up to the top side, I'd quite frequently have two charts up with the same thing, and one of them will be Heikin-Ishi. And that, especially if I'm fucking around on the options, right, Heikin-Ishi is pretty handy. I say that, but right, I'm actually more serious and more considered when I'm trading ups. But like, and when I say that, it's like, it also doesn't look like that if you were to see me, because it's a roundabout nowadays where I'm like doing it and then it'd be like at market close and I'm like, come on! And stuff. But I really am. I mean, I do the TA so that I can be emotional in those moments. I enjoy it. Being that. I'm very different. Look at him. I'm going to turn into a huge fat bastard, Bunsen. I play our Doom's playing now. Yo, Kieran, I was talking to you last night and I fell asleep, and this morning I woke up and I was like, hey, looking at your name. Looking at your name. Oh, hey, I got one also. Doom player won't be that glory. Well, not. Yes. So, we're good then. We're all good. Would you consider for GME that there's a gap of $90 for March on Twitter? Yo, the ball Hennings, this is the thing, right? Oh, frick, I'm still not got my proper data up, innit? Still not got my proper data up. Tradespotting, you really need to pull a finger out. So you're thinking of 94. I mean, you might have it here, but I'm not on the real data. So this particular gap, I wouldn't put as much faith in as everybody else. On the 1 hour time frame, 1 hour. Here we are. And March. Well, that came before April. Hello, March. Hello, March. Speaking about March, have you been to unreasonable.shop recently? Check it out. I'm thinking I will take the products that are on there and replace them with others. So if you have your eye on anything, you'll have to get it soon. Also, yes, there's on this data there is, right? But this is CBOE. SIBO, as I shout at Rich when he's trying to talk to me, Rocky. He's trying to tell me something interesting in around these times, or try to give me advice about something that I'm trading when we're like doing this, not YouTube and market open, and I'm trading that. He'll be like, Tradespotting, blah, 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 blah. And for some reason, often I'll just start going, SIBO! And I think it's because I find it funny. I don't know, he does though. So here's this, you've made it to this line, you've broken through that downward sloping supply line. Oh my goodness, Tradespotting. Look, you can't call things like that. It's the biggest thing in trading thing in the world, right? If you could do that, you'd be mental. They'd lock you up, right? They'd lock you up if you could do that. Bitcoin, it's had a reaction. Like I said, panic merchants. Look that. And then back there, it's whole panic merchants. Oh my God, hey. And it takes people to anyway, yeah. Right? And so here's the honestly, really though. So we found your gap, Mr. Bullhenning. You're very, very right. We found your gap there, Mr. Bullhenning, but it's the CBO. SIBO! So, yeah. Yankee Doodle went to town. Doodle pony. Put a macaroni in his hat. Put a feather in his hat. Called it macaroni. What song, eh? That thing should make a comeback. Rocky loves that song. He sings that to annoy me when I'm talking. When I'm saying that are things that are interesting or trying to advise him on things or giving him goddamn amazing, pertinent, immediately interesting advice. He starts singing, Yankee Doodle went to town, and that. He keeps doing it. That. It's like, and I know he's doing it. Sometimes he's not even singing it. Sometimes he's looking at me like he's really interested and he's like, but I can tell that when he's not saying he's like, Hey, what's that all about? Tradespotting, I was in the shop just yesterday. For the love of God, do not send me the receipt. Yeah, no, I don't think we do. I don't think we do receipts. If we do, I'm going to have to put a stop to that. If my fancy opens a package and sees a receipt for a fanny pack. Here, why is my thing flashing? It's because I've got a message. See, the fax machine. Tradespotting, what have you done wrong? I've done the fax machine thing wrong again. I need my head examined. Right, I've opened this. It says we're working. It says we're flying. Got a communication up. Right, that's the message. That works. That looks good. I think we're working. Right, okay. but then more fool me, which is it. And then you can see the lights are all going mental because when the fax machine temporarily glitched out, and obviously I get the fax requests in and that, but they only come in as digital notification when I haven't got like a normal YouTube streamer, when I don't have the fax machine working. It's just a digital notification. It's like you also get other ones about stupid stuff that you don't care about. Obviously, you know what notifications are like. So I'm always like, oh shit, I'm going to miss something, even though I haven't had a fax machine request since the last one I did. But you never know, and that. So I mean, who cares, right? But anyway, I've got shitloads of lights all around the house, Philips Hue ones, and so they go mental. So my whole house goes mental, like completely mental when somebody does a thing. And I actually thought it was quite funny. I mean, you can't see it here, but I've got some of the lights on the other side of this blind, which casts like a bigger shade when it's not bright outside. But it doesn't cast a shade. That's a stupid thing to say. It's a light. Anyhow, and no one cares about this story anyway. How ridiculous. But when I was leaving to go and do work there late last night, like 11:30 or whatever, I had to go leave here to do work. It's this absurd day. I've got a ridiculous lifestyle. And you know, maybe one day I'll get a break. Anyway, so it looked crazy from outside and that, and I've spoken to the neighbours before and walking past, and they've been like, oh my God, it looks crazy. What are you doing? And I'm like, well, really? You're an old person. Why do you think it? I thought you'd be embarrassed. Like, you're an old fogey. And they're like, no, it's so exciting. And that, I think it's because they don't want to seem like old fogies, because the lights are a little bit much, right? They are. For normal human beings, they are a little bit much. Hey, look, we've already done this, Tradespotting. You know you've already done that. You're trying to change the subject, aren't you? This is like, style, you can do this style, you know, if you ever do find that receipt and whatnot and get in trouble, you can just be like, tie an onion to your belt. Miss Tradespotting, I was saying to stop Tradespotting. Sometimes I walk through this house and be the starfish and yells, today's the day. Wow. Hi, Jamie. Do you think a 50 basis point increase has been priced in so that the FACMA meeting won't have much effect tomorrow? Has it been priced in? So 50 basis points. Well, I mean, this is we were down at 400. We have to hold 400 is what people were worried about. Look, this Tradespotting's right again. Tradespotting, right again. What's the question? Dana, Sorry, Donna and Dana. This is Dana. Mrs. Robertson. Oh, it's a Scottish last name, Mrs. Robertson. Hi, Jamie. Hi, Dana. Do you think a 50 basis point increase has been priced in? Yeah, so has it been priced in? 50 basis point been priced in? Yeah, I think it has been. Let's call it that, right? Baked in. Let's call it baked in. Yeah, I think it has been since end of last week. There was that happening, and then. This is the thing, right? I've got this, like, I've been trying to tell people this, like, it's not, like, desperately important look, Spies did what I said it would do again. Amazing, right? It's amazing. I'm amazing. So, we're all amazing, really. Like, we're the best of this shit. We are. And I get judged next to other YouTubers, so does Rocky, but we're not really. We're real traders who worked at real banks with real big money and did this all the time, and not like those other people. Anyway, we still laugh in the same arena, and I don't have any problem with them. It's other people who judge them, but then they judge me beside them, and it's like, fuck's sake. Anyway, what was the question? Yeah, so this is the thing, right? Rate rises, you know, it's all very much a plan. You know, it's a plan. You know, plan survives contact with the enemy. First casualty of war is truth. You've got your plan, and you can see that inflation's a little bit nasty. You're hoping that it slows down. You know that if you do certain things, you'll only contribute to it, right? Like, everyone's like, wow, inflation's terrible. They have to raise interest rates. And you're like, there's like 7 or 8 dynamics at least that if you don't mention when you say that sentence, you're literally engaging in willful ignorance. There's so many things, and the best way of summing it up is Jerome's in the closet. Jerome won't come out of the closet, right? That's the problem. He can't get out of the closet. And once he does, then he'll come out. Then he'll have a definitive, and stuff will happen. But Jerome's always hiding in the closet, and so you know. There's that, right? And there's Lagarde, right? She's that, and I'm robot Lagarde, right? I'm fucking Euro Robocop, right? Ain't nothing getting past me. And it's like, nah, fucking, you don't know what you're talking about, right? You're all about image, and you know, with your Chanel suits and that, you present a clean cut image. And you spend extra time trying to wash that dirt off in the bath, don't you, Christine? And also, I know what you're like, right? I know what you're like. I know you're upside down, right? You're going to flake, right? And the question is, does Christine or Jerome blink first, right? Who blinks first? Probably Jerome, but because Christine likes to do everything 2-3 months behind. It's not her fault, right? It's this European car. It goes like that. It's like 2 or 3 months behind. So 3 months. So who's going to blink first, right? Because Europe can always just be like, we anticipate this inflationary cycle is actually going to be going slightly. It's going to end slightly quicker, or it's got so bad in like particular pressure points at the minute, and I've got so bad that. And because it's already like the cost of living crisis is so very much already like a political concern in some countries, maybe they'll have a blink, right? They'll blink and they'll not raise rates. Ages. And then, or else J-Pow will blink and not raise it. And that's like, because everyone's standing around waiting for somebody to blink and Britain not to blink because they never blink on rate rises. It never happens. That never has, never will. And this is fact. And then, so much of what's the hot money, there's inflection points coming that it's obvious, right? The world order's was under threat there recently. So, what am I talking about? Inflation taxation without representation, it robs the poor. That's what it does. It robs the poor. It's like a counter to this idea of the quality of life is improving because of the technological benefits, and that is destroyed by inflation. Also, the idea of trickle-down economics is completely destroyed by inflation. And then even the mechanism of inflation itself is a bastardization of the original Keynesian proposition for how you would manage the distribution of productivity across various industrial zones after the end. It's all like a massive scam anyway, but it kind of works to a certain degree as long as we get out of the closet, Jerome. Cheers, Tradespotting. Can you? Yes, shit, baby, why? Yeah, that was right. Someone asked about that, so he did. And so this is still at that line, right? It's like, it did work! It did work! Yes! CBI, you're legend. I'm looking for a GME entry. Ooh! The daily looks bearish, doesn't it? But I feel some not so bad news from the Fed tomorrow. Might drive up to prices. Here, whoa, yo. The neighbors, they probably wonder what's going on. It's like whatever the fuck I feel like is going on. Shut up. Right, so there is 1 hour time frame. GME, low high. This is already back here. Let's start on the daily, right? You're looking at and you say it looks bearish on daily. Well, it's funny, right? Because actually, it's up 0.36%, back up at $120. That's not bad, right? Considering the low of yesterday and around, what was that? 112. I mean, I know that, right? Anyway, so, this considerable decrease, $8 from there. Interesting. Yeah, you're right, though. Today does look bearish in that we've come down to the bottom Bollinger Band again, having, had a rejection wick from outside of this, right? And do you know how the Bollinger Bands work? Anyway, right, they use a standard deviation to mark distribution, and then you'll understand with the way standard deviations work that very, very infrequently would you find yourself on the extreme side of a Bollinger Band on a daily time frame, and when you do, price action would very much likely correct. Those corrections that go back inside the Bollinger Bands that then rest on the bottom level and trace it down, right? They're quite strongly bearishly trending moves. So you've not defeated any of that theory, and you would look at this and that really is perhaps why you would think that today's a little bit bearish so far. Go down to the 4 hour time frame. You can see in the context of yesterday's price action here, tried to the top, failed at the mid-level of yesterday's candle, that overall, that's not exactly inspirational, is it? Sugar, my lord, Tradespotting, and when banana go, yeah, 2 seconds. And, right, so this is the first point, why today looks a little bit bearish, right? Might be that. Today could go bullish, right? It could go bullish. I would say that you'd need to be back above 125 to start saying perhaps the trend had changed, inflation to the top side and whatnot. And there's the first answer, not for yourself, Komodo Dosh, who's buying lots of GME, who's always looking for good entries to buy more GME, who knows the crack with GME, and people who, and I'm not saying this isn't the other members of the audience, I'm saying maybe this is you too, it's not whether GME is going to be a success and a huge increase in value isn't a question to you. It's going to happen because of you, right? So those sort of people who, rather than the people who watch this show every so often are like, GME might do something one day. When's a good place to buy it? Those people, and they're like, oh, well, I'm only going to get it if it's super, super cheap. Right? That's a different way of looking at it. And some people like, they're only going to do it because they've already got loads of it. And other people like, are just waiting for the breakout, and they don't want to hold anything or have any opportunity cost taken from them in advance of it. But when it breaks out, they want to be there. In which case, those sort of people will be probably waiting for a positive move, right? Which isn't yourself, I imagine, right? And so they'd be looking for like a positive move. So they'd be looking for, probably they'd react to J Pow coming out and saying something. They'd be like, right, cool, I'll buy it now. Like after it's already had the news, when other people would be then looking for a sell-off to test a retest. Anyway, but so that's not, I'm not criticizing them because, that's a different way of managing your risk, and it is a good way of doing it, and it's how I trade loads of different things. But you need to be looking for a breakout formation. In that sense, those sort of people will be looking at either it's a break here on the 4-hour time frame, and these people are trying to trade it back up 125. It's this horizontal here at 132. You meet the basis line in the Bollinger Band daily time. Well, that's a 4-hour time. Where's the daily one? Up 140. Well, fuck, that's not going to be it, right? That's a big chunk of the move already gone. But then some of them will be going in early, and they're already close to that. It's 125, right? Breaking above 125, perhaps that were those people looking for it. But I think that overall, in the context of, like, say, even right, regardless of what JPOW comes out and says tomorrow, on the weekly time frame, there is this here, right? If you've got there, right, you've already tested it. Maybe you could go down. The trend is still intact until 100 in parabolic SER. At this stage, you'd be looking for a higher low inverted head and shoulders, and perhaps a reaction. Like, that was already one of them, though. It's a percentage move from 76 to 202. You had a reaction, a very strong reaction, and then a rejection from this downward sloping supply line here. So you're kind of right. We're on the weekly time frame, so you're very much talking about long-term information here, very much. And put on moving averages. There's your 200 period down there at 6104. There's your 50 simple up here where price action is just touched, right? 50 simple period moving average, weekly time frame. Having put in a potential inflection point, right? This is where a lot of people will be buying it. I'm not saying that they don't have stop losses or they won't have different ways of managing their risk depending on their strategy, and that won't necessarily be all the same place, even if their entries would be. But this is somewhere people will be buying it, right? This is where loads of people would love to get it, right? And that would also be a continuation of this downward sloping. Either it's a channel, it's a wedge, whatever, right? There's loads of different ways of looking at it. You could also say it's like a failed broken horizontal if you wanted, in which case it'd be an even, right? Whatever. Anyway, log makes things slightly less dramatic. And you can see this top side and bottom side actually form a channel, so it's not necessarily a wedge. People on, that's what I'm talking about here, the differences between log and linear that people were asking yesterday, right? This is totally different inflection. You might be looking at this as a downward sloping triangle or on linear. Or you might be looking at it as a wedge, which would have a break to the top side, and the downward sloping triangle would obviously have a break to the bottom side. Log chart shows you to be a channel, which then in context of previous price action makes this a bull flag. So there's a completely different things. Anyway, I just think that this is a good place to be looking to price action should it completely collapse because of negativity today, or if GPOW came out with negative messaging. And I think that this would be interesting also with the split and whatnot, and people, the general gestalt impression people's minds, despite the fact that we've not had the vote yet, is that it's going to be around 3-1. I know loads of people keep saying 7-1 in that, but this is how most people see it, as 3-1. So, then let's say most people imagine then, well, I'll have these three chairs, oh, musical chairs. And I'll have these three chairs instead of this one chair. And then there'll be some people want to use that liquidity and whatnot. And then, right, what do? Right, they value the market cap changes anyway, because the new companies come out. Market cap's the same part of me, and so the value of each shares and whatnot, and boom, there you go. And it might be well down to 60, because that's mid-level pricing of this thing since this formation has been going on has been around $150, $155, right? That's the median pricing of this thing. You can check it out all out there with weighted VWAP or whatever. Or you could just do it, right? The maths. Anyway, what am I talking about? So what was the question? I can't remember, right? The median price, though, the why it might be down around. Yeah, a lot of people might. I mean, so like this $60, it's not so quite. It's not right. I mean, see, when we're talking about price action now, it's 116, right? 118 spot 19, right? There's the basis that we were talking about, 116 pounds, right? So, you're talking about one, which is something that's going to be 3, and when it does be 3, it will immediately be worth a third. And so like $50-$60 sounds crazy, doesn't it? Sounds fucking crazy. It's even scarier if you're looking at your options contracts and that. But they adjust the strike price and the number of shares, the number of lots. Wow, Tradespotting. Is it the colors? I think it's the colors. I'm going to fix the colors. So that's the question. The daily looks bearish, but I feel some not so bad news coming from the Fed tomorrow. Yeah, so I mean, not so bad, right? Like they're hardly going to make it more basis points. Let's just stick to their current plan, probably, which has already been priced in. So like, isn't going to necessarily be. This isn't bad news, or they don't go through it, which is like ridiculously good news. And this is what I say with who's going to blink first. Is it Jerome? Is it Christine? It's not Boris, right? It's like not, he doesn't blink, right? He's actually made out of mayonnaise. He doesn't blink. That would fall apart if he did blink. Right? It's like two swords, but it's not two swords. It's mayonnaise. I wish I was cool. Same. Cheers. Hiya. Oh, baby. No, we didn't answer this question. So, I mean, the question essentially is, what do we think? What do we think? I think this is fantastic, but it doesn't mean it's going to be any cheaper than it is now, right? Because you'd have to buy, it'll be 3 times as many, so, and whatever, right? So it's not actually cheaper. I mean, I know people will say it is cheaper because it's $120 Tradespotting, and then it'll be 60, but if it got down, that would be 60. It's a half price Tradespotting, but it's not, because you're only buying like half as much of the company. It's just like a half a ticket, but it's not. These are now worth a full ticket because there is no such thing as half a whole. Anyway, right? I hope I'm making myself clear. I thought they are supposed to increase the rate hikes ahead of what it was planned. Why would you increase the rate hikes ahead of what was planned? What are you talking about? Well, they start on lower rate rises, usually, generally speaking, don't want to hurt people's feelings. Sometimes they start with one big, huge percentage chunk rate at the start, but that's fucking stupid. Hey, that was back in the age of austerity. They do ramp it up sometimes, but I don't think they're planning on it. I think it's half a basis point, 50. That's what I thought they were planning. At least that would be like, why make it more complicated than that when they're going to probably have to change it anyway? So, good for them if they tried planning on anything else. That was stupid. Good morning. Yeah. Sibo. Bibo. Goes to Curry Bing Bong. Hey, how you doing? Oh, baby, why? Did I answer that question properly? Right. No, I didn't really. So you want to think good news tomorrow, bearish price action today. You want to get in on it. Maybe it's an options contract. Maybe it's some other way of raising liquidity, and you're thinking, I am expecting a positive move today, in which case, there's your 50 simple and weekly time frame coming in around 116. You've already have one touch of that area. It's only $1 away from you at the minute. And maybe that's people thinking, daily time frame, you look left and you can see there's this area here. You've gone beyond that and you've got a potential test of these zones. That'd be very good. On a daily time frame, you don't have much in the way of support and resistance between your previous low and where you are at the minute, other than this little breakout zone and this little resistance previous when you were below and above it. So maybe, if you did get in at around $98 with a sharp drop in ahead of this bearish feeling that some people have today, and like if this candle does extend down like on a 1 hour time frame and make it back below this low at 113, right, that could be a very sharp drop. You would get in around that, right? You might get 102 to 198. That might be the place you'd be targeting. My friend. If you think tomorrow's going to be good and today's very bearish, that would be like the place to look to. You'd have to catch a knife to do it, but that's what you're talking about, right? Because you want to benefit from tomorrow's price action as opposed to waiting for confirmation to enter the trade, in which case you're talking about catching knives, really. I know it seems sensible the way you've said it, but if you're not waiting to see what happens at the time and you're trying to take advantage of a move that happens not now, which is the downside, but tomorrow, which is the reaction and the positive, right? That's like getting ahead of yourself when you're trading to a certain extent. Anyway, to do that, that's what you'd look to. You'd look to these levels, and then you'd probably have to manage that with stops if you were doing it like without like on an option contract or something where you were exposed. If you're just buying it on spot and whatnot, then some there, litter it around that area, and then if you're long term, you're not waiting for positive breaks to the top side, which is fine, right? That, like I was saying it earlier, like as if disparagingly, but a lot of people just wait till things are trending bullishly and then buy it when it's in a trend, sell it before it reaches the top of the trend. They make loads of money, they get really rich, they have a really nice life, right? And good for them. So that might be great. But if you're not that person, you're still holding loads of dry powder, or you could get money all the time and whatever, lucky you, and you're trying to put it into this and in and around. Like it's hard to ignore the fact that you likely get between this 15 and 20% rise in price action in the 2 weeks subsequent to the actual split taking place, and that's like free money. The traders look at that stuff all the time. Like it's like one of the things, like for example, that people, I would have been talking to people about who got in touch with when the Tesla first, like not first, announced their most recent potential split, which is now in doubt, I suspect. They were asking like, how do we trade this? Like what sort of thing? And it's like, well, there's various ways of doing it. Probably price action is under a little bit of depression effect in advance of that. Also, the charts were saying like this is potentially going down to 450 and whatnot. And Rocky's Tesla T is fantastic. If you haven't been watching the last few months, you should have been. And so there's like all these implications, and then like it might well be that that you just follow this along the statistics that you would do maybe if you were, just a probability trader, or you're working at a large institution that do sort of things. You just look at it and you see the split come in and you buy it that day after it happens, and then 2 weeks later you sell it and you're up 20% most of the time. So that might be the best way to trade that sort of thing. And it's similar, like there'll be those implications for people who are looking at GME in the same way, because there's obviously the risk on event. Prices will go down and go down more than a third or whatever, or the immediate reaction, there's like increased liquidity, and who knows, right? You can't know how the market at large is going to respond to any fundamental piece of information, because everybody feels different about everything, right? The only thing that unites people is fear and greed. So that means that in the like that happens in advance of the event. Everyone's like, well, I don't know, I'll wait a little bit. And that's what a lot of people do. GME's got an extra narrative on the explosive nature of like, covering short positions, these outstanding, like anyway, right? You don't need me to tell you, the SEC had a report on it. So there's extra there, and like more violent you would expect, obviously. So some people are trading it like that, and they're like, oh, well, I mean, it will probably get 100%, right? And you probably will. Look at that. It went from $79 to $200, right? And we talked about it at the time. Like we said, advance said here, it's going to get to here. And when it gets to here, it's going to go to here. And when it got to here, when it was here, we said it's going to go to there. And when it gets to there, it's going to go to here. And then when it was here, we said it's probably going to go back to here. And you've been here that whole time, so you know that's all true. Well, Justin, Tradespotting morning, Jamie. Fax received about half an hour ago. Consider it just a tip for your efforts. I gotta go see the doc. Sugar, I didn't see it come in, and that's why the lights are all flashing. And there it is. Why did I not realize when I was talking about the lights are flashing is because of this thing that thing had happened. Why did I not realize that? Thanks, Justin. I will look at it. And you've got to go to the doctor. Bless you, Justin. I hope you have a nice time with the doctor and everything's okay. And if it's for someone else, then bless you a million times over. If it's for yourself, then all the best, mate. I hope it goes well, and that's good there. And I'll do it anyway, and I'll make a clip of it, and I'll tweet it at you. And it won't be just a tip, I'll do it for you. Thanks, mate. Thanks. I'll do it in 2 minutes. Thanks, Justin. Average Monk, Tradespotting, good morning, friend. Good morning, Average Monk, my friend. Taylor TA, once again, thanks for the thoughts on entries. Oh, that was brilliant. Now you... Thank you very much. Fax request. Godspeed, Justin Pickron. Good health to you. One nice message. Yeah. Thanks, Justin. Good luck out there. This is excellent, Tradespotting. The best lessons have different perspectives. Thanks, Kieran. Awesome. Do they get spoken to you in such weird, spitting, incoherent nonsense? Gonna go to the start of the stream and watch the GME bit. Yo, Mango. I can do more on GME if you like. How you doing, Mango? Good to see you. And then Wagwan Jam. Right, sharp lights. Hello. I'm back. Right. So, don't worry, man. Gonna watch the start and catch up. Cool, man. Go. Right. Well, I might be back later. It depends. Right. I've got to do a little bit more work, obviously. I'm always doing bloody work, so we'll see how that goes. Ooh, it's a bit cold. Right. So, but I think I had to answer Commodore questions. What have everything else been doing in the meantime? That's not what I wanted. I didn't want you, Pine Script. Go away. Banana, yeah. I got you, mate. Stally, can we look at AST? We bet you we can. Stally, we can. But damn. Right. AST. We did Commodore. Thanks so much. Justin, there you are. Could you speak for a minute on KSI, and CEI ticker if you feel so inclined? Yo, CEI, yeah. And KST, yeah. KSI. No, it's a KST, right? What did you say? Oh, KSI. Maybe that's what I said to you earlier, KSI. It's a KST. Sorry, KST, if I said the thing wrong. This is it. Get this full chart up there. It's the no sure thing. We'll use it like, it's a momentum indicator. You'd have to craft your own overbought, oversold zones. And this is why, this is it's a simple trading strategy with the KSI for Justin. Maybe I should make it a clip. Well, I'll get rid of the mess on the charts in the first instance. Hey. Rizump. This is simple trading strategy. This is a simple trade. Welcome to my simple trading strategy. Do it on 30 minutes because like people like that sort of thing. And to reach, so it's clear and obvious. We'll even change the color so it's like really obvious, right? Really obvious in the colors that we love. We love these colors. What? I mean, like, what? I mean, what? Right, so, I mean, they're not really thick enough, are they? Do you guys think they're thick enough? I don't think they are. It's everything too skinny today. Thank you. And the zero line is important with the KS, so it's important, so I'll highlight it. Make it whiter anyway. Right, thank you very much. Slow. Right, the parabolic SDR. There's loads of different things on there that we don't really need right now. Nor do we need the volume, and nor do we need that. And then we don't need any of these either. Boing, 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 de boing, boing. Pew. So this is a trading strategy, right? I'll show you how it works. Now, when the KSI, if you're going long, right? If you're going long, you want price action to be above the 200 period moving average, and you want the KSI to be this KSI line, KST, stop it, trace one, no sure thing, to be going, this is the green line, to be above the signal line, which is the purple line here, right? You want the green line on top, right? They're both obviously very close, but the green one has to be on top. So you're speaking to a cross like this, where the green line crosses above the purple line, which KST crossing above the signal line from below the center line, right? From below the center line, while price action is above the 200 period moving average. And then you get a move, right? You get a move. Generally speaking, I trade this for a 1.15 to 1 risk reward ratio, right? I want 1.15 of these trades I take. So this would be an entry here. Price action, you had a positive cross with the KST, so your momentum was swinging to the top side. This is similar how you use the MACD, but there are differences in it, right? And there is a different success rate between these two strategies. Anyway, this is a similar way of using it. You wait till price action is above the 200 period moving average, so you don't take it at this low, right? You wouldn't take that trade. You take it here when the cross happened, as price action went through the 200 period moving average, at which stage you got an increase of 9.37% on price action. At that stage, you also had another occasion here, but you can see this cross happened above the center line. So this is a no trade, right? This is not a trade. And if the way you take profit is you have a target of a 1.5 to 1 risk reward ratio before you enter the trade. And so it reaches your target when it goes up 10%, right? You've made, that's a successful trade. And that was what you were looking for. Not to exploit the fullness of any one oscillation, which is something you can't control and is totally random. You were trying to make the most of something that you could control and understand. And that was the 1.15, and you got it. And that was the first example. And there's fucking loads of them, right? Here's, where is another one? That was just the first one I looked at. Here's a cross. You've had the cross beforehand. They're two moving through. You go through the 200 period moving average, and you suppose you get a test. That's a different signal. It's not as clear cut or as good either. And I'm trying to do it just as it goes back through the 200, which isn't quite like what it's for. And we're on the 30-minute time frame. Here's a good example. Here you had a cross price action just touched below the center line, not this KST just below the center line. So you got your valid signal price action bouncing off the 200 period moving average. You got your trade, right? And it's just like this, right? You just look at the just price action alone. You know, this is quite dodgy, especially when you've put in a lower low than here. You're looking left and you're like, this is a 10 triangle and whatnot, and blah, blah, blah. And I don't know how that's going to work out. But then you've got your momentum. Tells you like, actually things have changed. It's flipped to the top side. And you've got your strategy, which says you're above the 200 period moving average. This is happening, like just sneaks under the center line and do it. And so it's fantastic. And then price action at this level, you know, you had your, well, not really got it there. You got close to it, but this was, again, not a good enough signal to take on it alone. Here you had your cross. This is a perfect one, right? You're above the 200 period moving average. You've had your cross below the center line. KST line's gone above the signal line. You're on the 30-minute time frame. You've got an easy area to manage your risk, and these stop losses at 53 and 150, and then the move of that like took you up to 226, right? This signal, fantastic, right? And that's like 2 or 3 we've looked at, and they all work out. And and I can tell you, did I make a clip of this? Didn't. What an idiot me. That'll give you a risk reward ratio. If it's a 1.15 to 1 risk reward ratio, you'll get a successful trade if you follow those rules approximately 65% of the time. Right? That's free money from me to you. Pretty good tip, that. Right. So 30-minute time frame on GME. That's what we were talking about. We weren't. We were talking about. Justin asked. Justin, I hope you, when you get back from the doctor, that everything you had was good news. I'll make this in a clip for him. That's a nice way to do it. Hi, Justin. I hope you had great news at the doctor. We just went through a quick strategy on the stream, right? And I don't know how long I am in it, but maybe somebody will be making chapters and they'll put in this tip in it and they'll say, Justin, this is for you. Get that tip in it. So it's back then. And I can tell you, UK time, it was at 3:30. So an hour into the stream, or an hour and a half, maybe an hour and 20 minutes, there's a tip about how to use the no sure thing for a simple trading strategy that likely makes you some money. I used on the 30-minute time frame with a 200 period moving average and the center line of the KST to give us qualifiers on trading signals. And it works for going long, and the inverse of that strategy works for going short, and they both work equally well. So that's that. And you asked about CEI. Where is this message? I saw it on the screen earlier. It was here. CEI. You betcha. Nope, the computer wants to give me CI. CEI. Come on, Camber Energy. This is the one. This is the one. The one. Energy markets. Interesting energy at the minute. There's a lot of volatility on this thing. And then overall, this is a terrible, terrible downtrend. Terrible, terrible, terrible. Terrible, right? So you've had a potential cross on the KST. This is on the weekly time frame. So, I mean, in terms of validity, you know, you build that in it. You're also significantly below the 200 period moving average. So that strategy on this particular time frame isn't necessarily giving you the answer. But if you're looking for a breakout and you're on a 30-minute time frame, for example, and you're thinking something like, this is a downward sloping trend previously, broke through here, you retested this area, and you're potentially going to the top side at the same time as having this potential cross in the KSI. Maybe you're then looking for it to get back up to around 8.5, 8.4, the resistance at the top side where you previously touched, in which case this may be on the 30-minute time frame a channel that comes like where you've already reached the high of it. If you break above there, then perhaps you've got a broadening formation that would come in line with this previous horizontal that we marked on 200 period moving average on the 30-minute time frame. Might well be that like that's the extent of this. We've already come up and met this resistance and had a little bit of rejection to the midpoint of the previous candle on the 30-minute time frame, which you've got Only gone into it 2 minutes and that, so we'll see how it goes, right? This is a very immediate, you can't make your decision now. It's not particularly positive that you've had such a strong reaction in the previous 30 minutes. But you held the basis line, no, that was the previous 30 minutes, and you held the center of that previous candle, and that's not all that bad, right? So, I mean, if you test to the top side now, if this goes back above, say, 7.95, maybe you would be targeting that up at 8.4. But it's just on a 30-minute time frame with a cross below this. That's okay. That's not so terrible. You would also be able to take out your Fibonacci's now to your low, your high, and see that 236 matches this resistance level. It's very unlikely you break that in the first pass. You didn't so far. So this level here, this was very interesting. Then I suppose that's a 50% retracement from this low to that high. 382. There's a 50%. Yeah. So at 784 something. So far, we're holding that, and this is continuation of an uptrend in that sense. We'll see if you took on the 8-period exponential. Does that add to those theses? Yes, you're above that. You're holding it at the minute. This is still potentially an inflection point. I'd very much be looking to 0.797. If it breaks that, I'd be looking up to 8.190. That would be an interesting point. Like structurally, this would be an important part of the market here. And so I'd treat that as a pivot point. Should you defeat it, I'd like to see and expect price action to push it back up to 8.3, not 0.83, 8.9, and not 0.84, that sort of level. All of that holds a 236 and takes it through the previous one at 0.8180. So, this channel might be slightly more like that, and price action test those levels in the near future. It might not even be channel right. That sort of thing. It would be potentially a little bit bearish if that continued, especially if you went below your previous low. Let's get up to RSI. I mean, I'm not actually doing like a coherent TA here. If I should start on the daily time frame, make this slightly easier to follow along. But we're on 30 minute. We've got lessons than that anyway. So where did that go? To the golden pocket yet? No. Hold 50%. Okay, and bounce at the center line as this does too, right? That's still bullish, right? Everything's still bullish. I'm still aiming for 0.8. 180 still in the short term, but let's see how that evolves anyway. Whatever. Weekly time frame, right? Start here back. KSC had this potential cross from below the center line. That's good to see. We know that you're significantly away from the 200 period moving averages, and while we're here, we'll turn on the 50 simple. We're far away from 250 simple, and we'll hide these drawings so it's slightly more obvious just to my weekly. It's very, very low at 0.9374. So you've got your weekly 50 simple period moving average, and it seems to be providing resistance on the candle closes for as things stand. You have a potential momentum change. That's good to see. It's coming through in continuation of a trend that you would expect with higher lows and higher highs. Price action itself is pushing higher than those previous levels throughout this period of time, so that's not necessarily terrible. If it was going, continuation divergence, that would be a nightmare, but it's actually okay. And a period of flux. You don't have a bottom information on price action on that weekly, and the RSI has recovered from the bearish control zone, but that's where it lived since it existed on the weekly time frame. It's always been in a downtrend, as we spoke about. It was awful, right? This was awful until such times as it cost like 40 cents. The Nacho friend, woohoo! Yo, freaking legend. See that? I will get to that in 2 seconds. Thanks very much, Nacho friend. And yes, so on the weekly time frame, right, it's been crap for ages. You've got potential interest in it now. There's a little degree of momentum coming into things, and it's above the bearish control zone, its own moving average. That's good to see, but you've really never had any trend above the center line on the RSI on the weekly time frame. So that's not fantastic. This cross on the KST, in and of itself, that's not a lot to go on, but price action has been trending sideways for a while, and so maybe you see a push to about the top side of this long-term range on the weekly time frame with this cross on the KSI. I mean, this is what you've had before, right? This low cross on the KSI, price action tested up there, and I mean, This is why it's interesting to Justin, is because price action doesn't look like it moved very much, but it did. As a percentage, it went up 600%, right? And it did it in a week there, right? 600%. That's quite good for anyone who's trading this thing. And then, the cross went through. You had other moves to the top side, which hundreds of percent and up and down again, right? You'd have to be measuring it on smaller time frames than a weekly to get this. But there's the next cross on the KSI that came in here. I mean, I'm not like, this is the negative cross, right? So you went out of the move here. If you entered there, it's hundreds and 100%. And I'm not saying this is how to trade, and I'm not saying this is like going to work for everybody. You'll be able to see it at the time or anything. I'm not saying that this is even relevant for price action going forward, but I'll talk about this indicator here and show what it might give you information. Then you had another cross at the top side. That was at here, right? So, that was like a sell signal in advance of that. You had your cross to buy at this low, right? So you mean this is dead easy, right? This is like making trading easy. You don't have to figure stuff out. You don't have to be like, look, I knew this, even though 3 minutes ago I knew nothing. Tradespotting taught me something. Yeah, I know everything. Just a reminder. I know. And you don't know anything. You're just learning. It's so embarrassing. Stop that. Anyway, so I'm not slagging anyone in particular. I love everybody, but then this is not who I would consider my students. No way. So low cross, high cross. Low cross, but I have to put one in here too, don't I? Because it happened. There's a cross, look, and there's a price action peaking there. It happened slightly after. You have your MACD on too, you probably get a slightly, quicker exit on this. This is another top tip, right? Entry, long, nearly, right, 600%, then close your trade, thank you very much. It give you that signal as well. And then open another one, right, great, thank you very much. What was that one? Other 100%, right? I'm not even drawing it accurately, and that's 400%. And then you got that sell signal at that peak too, so it give you this as well, right? And if you're trading options, just imagine how rich you are now. And then you had your cross there and took you below the 8-period exponential, so even if you missed it, you got a retest of that, and it's like you still got 200%. So then you had another cross here, right? And then you got another one. Eventually, this isn't going to work, right? Eventually, this is so obvious to the whole world that it stops working. Because someone with lots of liquidity sees that they can take their money off everybody, and that's you have to be careful. And your stop losses will never do you as much harm as the good they can, even if you're using them wrong. So there's a cross gain, and that was the last one. That was a sell signal, and it was a higher high on price action. It was debatable if you're forwarding a broadened information or not. And then in this most recent inflection, we've got all these different Fibonacci's that measured important horizontals. Still got some of them on price action there. And you can see clearly that we've had another cross here, right? Now, price action hasn't done anything since the weekly time frame. Doesn't have to respond immediately. I mean, this cross happened here, and you had, 2 weeks before anything really kicked off. So, there's that to temper your expectations. Oh, they've got these loins. Got these loins. Oh, my loins. Ain't nobody got loins like Tradespotting. So, move bigger, right? It's not doing it. I need a new one. Chuck that one out. And a new one. Where were you at? You can go bigger than the last dude. So this is the cross here. And it happened below the center line. So it's valid, just like those other ones. We defined this, perhaps you wouldn't take this short here, or sell that, because that cross came below the center line. But, the why, right? You should definitely shoot to the long was. And so then subsequently, this is slightly more clear. So you'd still get out of a position if you're worried before. You still made about 800%. So you're probably happy. And then this cross, that was absurd. I mean, a lot of people will be looking at this and saying, I want this again. Now, 600 isn't enough. I want 1,261%. And that's, right. Volatile energy markets, just interesting, right? It's Camber, CEI. We've talked about this a number of times. Justin's got good reason to be looking at it at the moment. So that's all on the weekly time frame. Am I making this a clip? I am. Thank you very much. Let's drop down today and see if we learn anything else. There's 200 period moving average. It's provided resistance at the minute. You can see you're in this downward sloping channel. It's potentially a channel. It's potentially a wedge. I did move and delete lines. It looks like a broadened information at the minute. As such, maybe you're looking for a retest of this 8394.84, not 0.84, and then you could easily get a move from that, take you up to 9.7. This is so volatile. You break out of the range. The elasticity within that formation alone suggests that you're going to make a move back up to 9.4 if you break 8.4, and that's quite large. It's quite a large percentage, and this thing does large percentage moves. And we drew in a number of Fibonacci's here. This low to this high, this was the move we're retracing downwards against still, and you've taken it to the 786 or thereabouts and had a positive reaction subsequently. We'll see what happens. This channel, as we've been speaking about, it's like slightly downward sloping, but all of it persists at the top side of these candle closes and the bottom side of these candle closes, all persists within the golden pocket retracement of this Fibonacci. So that's very important. If we're to take then this high down to this low here, right? I'm taking it back to here so that it doesn't interfere with what I'm going to talk about, but this is where I'm measuring it from, that low there. Your 236 comes in at around the 50%, and it's the top side of this formation. Like, you had body closes within the golden pocket, but you had wicks to the top side, and they were arrested when the price action made it back to 2.36%. Well, I've dropped that horizontal level on. So this is a market structure, right? You break out of this formation, you're aiming to test up at 8.9. Breaking out of it constitutes getting above 0.84. You're looking then to test 8.93. And should you break that, then you'll go on to the 200 period moving average on the 2-day time frame. The 50% retracement from this overall Fibonacci is where likely we find the next page of resistance, and it'll be about 0.94 to 0.95. And that's what you're looking at here. Where would the entry be? Well, at the downside of this formation, might have already the best one just passed, but we'll look down daily time frame. See, this is a positive reaction today. You're held below the 50 simple and daily time frame at the minute, and this is a negative trend with lower highs and lower lows. You'll go up, Misk. Get to that 2 seconds or slightly more, but soon. And so this is what you're thinking, that potentially, you've got a wick of the top side of that formation at the minute. We'll see down throughout the time frames what things look like. The RSI is below the center line. That's not fantastically positive, and it's below its own moving average. And we said lower highs and lower lows. So the trend is down. We can't necessarily bet against that, right? Well, I mean, you can, but it would be ridiculous. You want to trade with the trend, so or at least with momentum. And like I'm saying, momentum's below the center line, falling down. You're below its own moving average. It's below its own moving average. Although what we were talking about, though, with regards to these lows, one of them, the most recent one, is higher than the previous one, and in price action you can see it's lower than it was previously, and in the context of a downtrend, this is potentially bullish divergence. So do you make this into a channel? It doesn't look like it. It looks like it's now a wedge, perhaps an accumulation formation. If so, then it's got a measured move from within this, or implied target anyway. Top side of that takes you back up to 8.967. So it's very, very aspirational to be aiming up here for the 9.8s and whatnot, and back to 1. There's a very clear place to take profit around 8.94, 8.95, and the implied target from a break of this formation. Then there's also a fake out point, which would be the market structural previous high with these close and these wicks, and really it's the pivot point at 8.4, 8.5. So you make it above there, you're aiming for 8.9 change. And like, again, as I say, it's a very volatile asset, so I'm not going to rule it out going up to 9.8 in this whole move, and nor am I saying it's necessarily going to be bullish, but that's like the TA suggests, coming from the weekly down to the daily. If the momentum divergence that we see here does play out, I know you've already had a move to the top of this formation or on the daily time frame, and you've been rejected from it, and most of this move is now like debatably wick, but that's like, we'll find out more information in a minute. 4-hour time frame 1, only really one touch of divergence across the formation only, so maybe you need one more. 200 period moving average, you're below that, so negative inflection. 50 simple period moving average is above it, so you can take that negative inflection away and say, well, you break that 200, you might go to that 50 simple. That's the first level, it's the market structure, and also confluent with the pivot point. So you break that, it's even more significant, and this is really, really coming together, this TA, and we only did it on the weekly. There's a 2-hour time frame, 8 exponential, right? You obviously need to recover that to say you're significantly more bullish. There's your bearish divergence playing out here. 786 retracement on the Fibonacci from the low to the high that we were talking about. Well, that was from this breakdown point, and it all changes across the time frames, this obviously. So we'll delete EO, this EO, and put on a new one. Why am I talking like that? Don't know. Yankee Doodle, isn't it? Low, there's your 236 now. You haven't yet made it back above the center line and so on. You can see that comes in line with the 382 Fibonacci levels. The 236 is where the RSI is at the minute. And so this is important, right? It's important on the 2-hour time frame. If you break above these levels, right, the 236 on this, you would perhaps be aiming for a golden pocket, right? RSI back up towards 60, heading towards the bullish control zone. That would easily take you up to 0.84. I know that's a percentage move, but look at the chart and how it moves. So, it's interesting. 1-hour time frame. And let's see, what else are we getting on here? Filled your gap, defended the bottom side of that reaction with bearish divergence on the high. Was not higher, so not really, but you can tell it wasn't fantastic. Swing failure on the RSI. Price action managed to gap below the previous area. Interesting, there's a gap there too. Bad midder, folks. It's been a bad midder at 9.0 up to 9.1. And if there was a time to fill it, it's likely when the hourly 50 simple crosses back up of the 200 period moving average. And if price action comes from below that area to conquer both of those, like that's the resistance it finds at 8.9, 9.1, close that gap and do some damage to the other side of the trade at that stage. So that's what you'd be looking for. Continuation beyond that point, well, you'd have to measure it at the times, 30 minutes to get in a picture at your cross center line RSI. That's good to see. You've got your KST on Earl or there above. What's it telling us? You've got a positive signal there. Just had your cross as price action went from 767 up to 8. Right, huge percentage moves on this thing. That's the 30-minute time frame. Let's slip on the MACD and get like even closer. Maybe extra confluence on this stage. And our MACD signal came through just before. See, the cross came through just before the cross on the KST. So on that stage, you know, you were able to take it on this candle. And on the KSI, you were taking it on this candle. I mean, they're both the same entry price. That one comes sooner, but they're actually the same entry. So, you know, you can think like the MACD is giving you a favor by telling you in advance. But also, it was nearly wrong. And it was only when the KST crossed over that, yeah. So anyway, right. So that's information. And price action is sort of towards top side of this information. It might well be broadening wedge, and we'll see if you manage to break it above this downward sloping supply line. And then the 200 period moving average, this is what I think you're going to do, which is a tradable move in and of itself. So that's interesting. Very interesting. Thanks very much, Justin. I hope everything went well at Doctor. I'm going to stop this and do another tea and some other requests now. Pardon me, I'm also about to burn. Baby Queebers. Jammers Cravers. Where's Rocky? Is he on? Dude, like creative he is. Nowhere else can I learn as much as while smiling and having so much fun that I'm spitting my tea out at every turn. You make for a great day, Jimmy. Thank you, keep smiling. What a nice message. Fucking hell. That's a fucking brilliant one. Thanks. I'm going to put this in front of me here. I laid these out in front of me here. They look good. There's Natural Friend 49. Howdy, Jamie. Thanks, man. Can you do some TA on BBY while including some valuable trading lessons? Betcha I can, Natural Friend. You betcha I can. Thanks so much. Hit the like button if you're enjoying the stream. Share it with your friends if you've got any friends. So if you're like me, you've probably not got friends. You're probably a loner and you're like, what the this is so interesting, this Tradespotting guy, because I don't talk to other human beings. No, they're all more interesting than he is. Anyway, that was weird. Actually, I'm far better than other human beings. They're useless, right? So 9, right? Yes, great, 9. That's not what we're looking for. It's the natural friend. Right, so here, good cross, nice. Good cross, nice. You blew 200 period moving average. This is a 30-minute trend to the downside, which has got a very clear downward sloping supply line, and it's got a very clear demand line. Puts in, well, call it a channel. You can make it like that and call it a wedge, but really it's a channel. And into 30 minutes, that's what that's been up to. And, you know, channels are great because they just say, like, continuation. That's what it is. But without any, like, debate or that, it's just that's what it is. And then it tells you where it won't be. So, fantastic. Really, well, the measure move and, like, they don't break it one way or the other. So, in terms of, like, hype, you know, there's nothing there for a lot of people. But in terms of usability, fantastic. So, this is just a continuation of this other trend, which we could define like that and say it's got 2 touches. It's completely useless line. Tradespotting is a displacement, right, from this previous trend. That's what it is. And, you know, and you could have your pitchfork up here and you could see this evolving and you could be like, I'm trading and getting really rich. Woo! We're trading and getting rich. Whoa! Woo! 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 Yo! Woo! 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 Yo! Right, so I mean, there's various ways of doing it. I mean, you could even do it like that. Whoa, Tradespotting, what do you like? You could do it like that if you wanted. right? There's other ways you could do it too within this formation. You got your lows outside of there. I suppose we'll just leave it at that, and then you don't even need it at this anchor point here, right? You really don't. You could do it like that. No. Anyway, right? And we'll just leave it there. There's a pitchfork, right? There's various different types of pitchforks too you could use. And this is now making my drawings like a little bit confusing. But there was this downward sloping trend. Price action reached this horizontal level, which is probably significant on the daily and above. I mean, I'm trying to now DTA and match things in weird time frames. So what are you doing? Anyway, well, that's the level, yeah. And it was on daily time frame on 3rd of March. It reached that level. It had a reaction, a positive reaction, stronger than the average true range, and then had a bearish divergence and a continuation divergence, and price action went down again. It began the same trend that it was already on beforehand. It didn't begin it. It continued that from a period of displacement. It just moved to the right a little bit and then continued at the same linear projection as well. So you've got a pitchfork there, and you can use that to look at the. I mean, if you've got a Fibonacci pib lines in your pib fork, then you could combine this with a different type of Fibonacci and do a study in confluence, and you can mark out these different levels on the pitchfork, and you could do, or you could be using a horizontal channel to describe overall price action within this thing, right? This is what sometimes I do. It's very similar technique, but they're perhaps some simpler lessons. You can also do it like that, which there's your channel, right? And you've got all this on price action too, right? And that might keep things simpler. So let's delete everything apart from that channel. Keep it simple there. 2 eyes, and then, really you've only got one low, so this is not real. Yep, Tradespotting, what do you like? Anyway, that could be real with this period outside of it. Totally fine. In that stage, you'd see, right, your top side center line was significant there. You see, you went through it and then to the top side of it, then bottom side, then top side, bottom side, then middle. So the question is now, does it go back to the bottom, or does it go up, break it, and then you get a test of it and then test the top side? Likely. Or, whoops. Or is this the thing, right, with one touch anchored up here, 2 subsequently, and then you're looking at wicks, and I don't know if you can actually really genuinely give you that. But that's the way it is at the minute. And the 50 simple is below the 200 period moving average. So you've got a negative splay and a negative slope on those 2 important moving averages, which are indicative of the trend, which you can see from this high being lower than this high, that this was potentially then questioning this trend. You can see that the RSI joint equal, right, your wick more or less close enough, is near enough, and then a negative trend started with lower highs and lower lows. So it was very distinct, very obvious, and it's emphasized by the splay and slope of these moving averages. The 8-period exponential moving average is significantly above price action on the daily time frame, so you could say this is a strong downtrend, despite the fact that you haven't yet reached previous horizontal lows. It's still a strong trend. And each of these local lows and local highs are then significant with regards to breaks on price action should it get out of this formation. Then the first one of those comes in at around the bottom of the previous gap, and obvious market structure here with this resistance and this support and resistance. And like I say, it's within this formation, it's an important horizontal level, and it gets added significance. There's a 200 period moving average coming in currently, this other period of resistance looking left, top side of that gap, and where price action found resistance at the basis line and support when it previously went down here. So that's another area of interest. Dump, and we're on the daily, are we? Right, okay. And then second high, not looking at that, the previous low, you find the first, it's quite obvious looking left that you had to bounce at this area that was previously support, and that this was the first time you touched it. Across the indicators, you can see a bullish divergence throughout those lows, and then ultimately with the second touch, right, this was all bullishly divergent because you had higher lows on oscillators, and the price action was back at the same price, right, so which is class B bullish divergence in the context of that downtrend. Going above the center line at this point would have been great. You failed, moved your own moving average in the center line, it all collapsed, price action came back down. You got, there's another valuable lesson. You had it all as price action was hitting the 50 simple period moving average. It was below the 200, so you would have looked at it and thought to be potentially resistance. Having found a bullish divergence in the subsequent test of this area, that was not longer going to be support. Having tested it once, twice, 3 times within it, you got your bearish divergence, but you could see that it took 3 touches, and then after the next touch of support, you were obviously going to break right through it. You also had your 50 period moving average, and when you opened above it, that's crazy. You opened above it, and this candle closed this day, 4th of March at 13 at what, $15, and then it opened at 30. Oh, and did we not call most of this? I think we did, right? I think we even called this. Rocky called like from here, and I'm sure I talked about this retest. Anyway, fantastic. So then, yeah, you had that reaction. Again, the RSI spoke for price action. You fell through the center line. Price action collapsed below the exponential 8-period moving average, and as such is a strong trend. You're looking for another test of this area. At that stage, you can see you will no longer be bullishly divergent because the RSI itself is lower. If this was an uptrend, then perhaps you'd be saying that, like, you know, continuation divergence to the top side, but you're not seeing that. You know, you're not really seeing that. It's just a strong downtrend in this leg of formation, right? Remember we said that. So you're in the bearish control zone. That's also NAF. You're below your own moving average, so that's not fantastic. You have a potential touch of divergence on the histogram if you were to say that this was a previous low and around here, and that now we're obviously pushing lower, but the histogram, maybe it doesn't need to, right? Because like less liquidity and so on, maybe it doesn't need to, and because of the inflection point in the trend, right, you with the 50 and the 200, you know, they're actually getting closer, and because of previous behavior on price action, that there is this weakening seen on the histogram, which doesn't necessarily reflect a weakening of price action. You need to judge that at the top side of the formation, which would be back around 15 again, or at 13 spots, 74 at the minute. So we've made it to the daily time frame. We spoke mostly about trend, and we've talked about how the I suppose the lessons on the technical analysis there would be a touch about the moving averages, and then some nuances about them and how you maybe combine them with the what it would reflect on the histogram, and, you know, without getting confused by divergence, understanding the greater context of how this indicator is created. And then down here you can see we talked about bullish divergence and RSI, and you could combine that all together and get extra lessons. And we said how it led to inflections in the trend and pushing towards support and resistance, which we've defined looking at historical price action. So there's loads of information there, and there's also gaps that we've talked about, and we've talked about the strength of trend, measuring that using different exponential moving averages, and then combining that with what we talked about in terms of the RSI. So that's information that we think is very good. We are very happy with this information. This is fantastic. And then let's look at this in terms of this RSI. We already did this, right? Your 236, or did we? You know, I mean, it's just amazing. Maybe it is. Your 236 comes in at resistance at 1737. You make above that, your previous high comes in at the golden pocket at $30. So this is what you're looking at. Again, it's the same story as what happened before, but this time there's a completely different inflection because RSI is not bullishly divergent from the way it was before. RSI lower back here. Price action is not as low here, and RSI is not as low, but within the context of this trend, right, there's no divergence, whereas there was in this one, right, you were putting in divergence at the bottom, and this, you're still pushing lower, and price action is still also coming lower, and has the potential to break a basis line, and then a horizontal and everything else. You know, if you break this horizontal, it's terrible news for BBBY. You go back up the time frames rather than down them on this thing, and see, like, these are the horizontal levels at 1258. If you don't hold that, you're looking back down to around 743, right? That's like, it sounds brutal, but it's true. That's the next level of horizontal support, where you had it 1, twice, 3 in a breakout zone. You know, you also had a wick there, body closed back above it. Price action broke out from here, retested it. I mean, it's very, 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 very significant. Very significant. So, and then what in between here is, like, very little, right? Literally very little, other than perhaps, and then this is an extension, another valuable lesson. 1618 comes in here, gets like, this looks, you know, a job for me. 1.13, there's your first test. You know, get bullish divergence on this edge of the trend here, with price action pushing lower at the 1.13 target, 1, 2, 3 touches of that lower with higher touches on oscillator. That would be bullish divergence again, right? But then price action has responded to the previous ones, right? And it's come up here and it's failed to break above these levels despite the RSI testing them. So that looks like a swing, looks like a failure, and price action come back down. So, you know, these are the targets to aim to should you break to the top side, and if you don't hold them, there's a big gap to the downside, and it looks a little bit dodgy. Natural friend, did I record that as a clip? I fucking did it. Oh my god, I'm so stupid. Somebody want to find it? Somebody, you know, you can just do it. Make it the old clip there. You can do it if you like. Psst. Brilliant. Thanks for the KT and the Kira. I didn't know about that one. Cheers, Tradespotting. You're welcome, Ogarin. Thank you, very welcome. Are you subscribed? Are you subscribed, sir? Thank you, Tradespotting. You're welcome, Lady Kim. Different Bernard Freeze, thanks, my lord. Tradespotting, kind reminder that there was a fax request for EHT. Thank you very much. You're darn tootin' there was. Thank you very much, darn tootin'. That's a friend. I hope that was helpful. We didn't really get down to the immediates. The immediates, right? And let's quick look at the immediates. Look, you're above the basis line, below the 50 simple, 200 period moving average reaching on 50-minute time frame, the top side of this trend, and without defeating this trend, you could easily come back up to the top side of this channel, the 200 period moving average, 15.15. If you held that area, you could potentially go and test those levels above it. I wouldn't necessarily expect that happening right now because the RSI itself. This is petering out already. You're reaching these previous highs in RSI price action, nowhere near that previous high over here. So not fantastic. And continuation divergence is expected. Then in which case you probably come back down to these levels at 12.51. And maybe that's more realistic than going up to 15.15 from here. But if you did break that 50 simple period moving average, it's at 14.01. If you hold that on an hourly candle open and close, then you will push up, right? You will push it to 14.86 and probably wick to 15 and come back around these areas. But then, judging it after that, I'd be interested to see what's going on. I also see this is currently getting rejected from the bullish control zone and also the 50 simple. So not desperately positive on tiny short-term time frames. So the range there, similar to what we talked about, 12.48, 15 at the top side. And if it doesn't hold the bottom, then it'll go down to 11.26, and then if it doesn't hold that, down to $7 and change. And top side, if it does break up, it wouldn't get crazy excited until 17, but if you do, it could double. Crazy BBY, huge range, very volatile. Interesting stuff coming up on the BBY. Right, so we had a hutta. Here we have it, a hutta. Right, Tradespotting, make a clip this time. Dumbass idiot, Tradespotting, what you like? Start recording. Hi, we have a request for AHT. It came in from Dally. Holy sugar, was that like back on the first one and I didn't do it? Dally, you must hate me. I'm an idiot. I'm sorry. Right, AHT. Right, weekly time frame. What are we saying? Weekly? Right, well, it's either opportunity or it's like bleh, bleh, but it's been like bleh, bleh, bleh for a while, right? So, and it hasn't died yet. So, looking at this, we can see that there's potentially bullish divergence on the longer term time frames. KST is telling us you've got a couple of crosses. Momentum is potentially changing. It certainly stopped pushing it down. That's definitely happened. Then MACD, you've got positive sign in the histogram. That's not bad. You had a cross breaking ages ago. Price action hasn't managed to break any important horizontal levels since. If you had the cross and price action continued to the downside, so you've got like a touch of divergence on the MACD and signal line. You also had the histogram start to push up at that stage as price action was like putting in lower highs. That's like distinctly bullishly divergent, right? On a weekly time frame there's inflection points coming. It may well be that price action keeps going down lower as it has been doing throughout this signal, but that's interesting. You've got a negative splay and a negative slope between these important moving averages, which are obviously defining trends. You're below the 80 exponential on the weekly time frame, so a strong downtrend. That obviously finds itself below the 50, which is below the 200 simple, right? So interesting information. Below the centerline RSI and the long-term time frames, it's hard to be bullish on things, even if they do have inflection points and potential signs of momentum changes. So that's that. 3-day time frame. You're still below that 8 exponential. You have a positive cross on the KST, still trying to work its way out, though you're finding resistance on the RSI and potentially putting in head and shoulders at the center line. You're lost your own moving average on the right-hand shoulder at that point. And price action back testing these horizontals. MACD, you're getting close to the center line, but not getting the full confirmation of that signal. And price action has been going down in the meantime, which isn't desperately inspirational. And as we spoke about the KST, it's coming from the right place and it's got a good cross, but you're below the 200 period moving average. So in terms of a valid trade, that you don't have it on the small, on these small moves with this risk reward tightness, you don't have that. 236 from the most recent high within this formation on the 3-day. You can see that was back when prices were up around $1,000, and now they're down at 6 and change. So very different. I'm not sure. Obviously, most people watching along might not know, right? Ashford Hospitality Trust Inc. The way that these vehicles is an investment vehicle, and the way that it's run is that it's very much when things are different in other sides of a business, like the profits that are taken from this particular tributary get pushed towards that direction, and when everything's good, right, this does particularly well. So it's like got extreme reactions, and then we'll have extreme reactions to news and market conditions. So it's the sort of thing that when it's at huge lows, is when you get the biggest opportunity in terms of moves, and you also get them sometimes really fast in assets like this. So, and the overall inflection in the market might speak to that potential sort of thing happening soon. From the start of the show, we were talking about, if everybody's wrong, plus if everybody's right, it could be huge moves. So am I staying on topic here? Right, we're on the 3-day, and we can see that the RSI again, not particularly positive there. That's what jumped out at me. The KST looks okay, but the MACD suggests that you're potentially reaching the end of that period of momentum. We need to try and pay attention to price action when you see it's at these lows here. Previous low lower than that. RSI similar place, can't take much from that. Overall, obviously, price action is higher than these previous lows, and RSI still is, so no divergence to speak to, and a downtrend with lower highs, and continuing that process now with lower low most recently. So that's negative on the daily time frame. We've come from potential momentum changes on long-term time frames, but that would take a while to see that play out in flux, like on these medium terms. And what you'd really need to see is like continued strong action on the smallest time frames. So the daily time frame here, negative slope, negative splay on your moving averages, and you're significantly far away from the 236, from the greatest big oscillation with the most recent high and whatnot. There's a number of areas where price action could also dictate a Fibonacci starting from this higher low and higher high. Subsequent price action coming in with a touch of bullish divergence, and overall being in what looks like a little bit of a wedge is kind of interesting. No, that's like hard to ignore. 1, 2, 3, and that's an obvious one from the breakdown point. A lot of people will be drawing that trend line, and then here, you might have only said, well, I've only got 2 touches, but these are like 1, 2, 3 here, and at least 2 there. You could call that 5. You could call it 6. So does that look like a tightening formation? It kind of does, With the RSI putting in sort of recovery, higher lows, that's interesting too. This is like continuation divergence constantly with these higher highs and lower lows on price action though. Like this I don't like. I really, really don't like that. And, if you were to break this, you could see that you would only really make it to the 236. There's like the elasticity there. Break it in around here. You're not going to break the top side of that formation, even if this does lead to a bullish move in the bearish control zone now, so I wouldn't be jumping on it on daily. And then you've got a touch of bullish divergence perhaps on the histogram, and then the KST is actually giving you a good idea there, if you're pushing towards 200, and that stage you'd have broken, like, this might well push. That's interesting, right? If the overall market has a positive inflection, it doesn't even need to go through anything in particular to see this thing. Why you're not dropping it is push back to the 200 period simple moving average on the daily time frame, and higher oscillation within this potential sideways price action here. And we talked about the oscillators, and they don't inspire me with confidence at all, any of them. 4-hour time frame, again with a negative slope and negative splay on the frickin' moving averages, right? It's very difficult to be positive about this thing when it's been so low for so long. But at the same time, you do have potential bullish divergence between these lows, and this thing's already started to push to the top side, so that's interesting. Again, this depends on the overall market a lot, but then you had the reason to try lower again after that, but that was very obviously bullishly divergent there. The MACD, interesting, you try that. 200 period moving average, the top side of the trend here. It's been dominating price action for a significant amount of time on the 4-hour since you put in this huge gap back in July of last summer. And on the 4-hour time frame, price action has continued its downward moves. The 200 period moving average has been slightly more aggressive and is now meeting price action at the top side of the current formation that we find ourselves in the 4-hour time frame. You've been above it once there briefly back at the end of March, the start of April, for the first time in nearly a year. You've then had a reaction subsequently and have now got a bullishly divergent area, which if you make it back above a 236 would be the first bullish divergent low that you have had since you tested that 200 period moving average again. It would come in a joint low looking left, so it would be an entry for a lot of people, and as we say, it's bullishly divergent across a number of time frames. So this is interesting. Things are potentially turning around. The earnings that they have here, right, I don't put any faith in that because of the nature of this type of investment vehicle. You can see this cross, not fantastic. That was at the 200 period moving average. That was your sell signal. You've nothing ending that yet. So it would all be about the 236, and there's a number of oscillations in this trend. First one, 7.43. See it back above 7.43. That's now significant when it potentially wasn't all that significant before. Now it is, and you get 7.18, right? That doesn't seem all that inconceivable at all. So this is this. You've had it once and a rejection from it. Sugars. Darn it. I should have been quicker with the AHT. I should have been quicker. Right, so you've got up on this as the 4 hour. It was at the end of 15 minutes. And probably when Stally was asking about it. Trade spotting! Right, so 8 period exponential moving average down here in the 15-minute time frame. You're held below that. This is still a downward trend, which is like quite strong. It's below the 50 simple, which is below the 200. You've had a positive move on the RSI. If you captured your own moving average, and now you're testing the center line. If you break through the center line in 15 minutes on RSI, you'll also go through the 8 exponential. You'll aim towards 717, 718. At that stage, I'd look to the RSI itself and see, is that going to weaken? Is this a continuation of a trend? Do we potentially push back up to the 200 period moving average in this horizontal level and around 786? And then the golden pocket, should you aim to if you held this 236 and any sort of retest at 216, 716, 717, haven't gone through it. If you held this at a retest, then you would be aiming for those stair stepping all the way up to the golden pocket and looking left, like your most recent highs, 1, 2, 3 have all come in where the RSI is at the minute. And so you've got to bear in mind that this is a downward trend, that you will get oscillations to the top side and continuation within it. It's a channel, and channels very easy for looking for continuation, and here you've most recently hit the top side of it and been rejected from a 236. If you don't recover the 8 exponential, then more of this should be expected. There's various ways you can measure it. The extensions, you've got one here, 2618 comes in at around 624. It'd be the first place to look through if things break down. You can see this previous low, and this trend has continued with the not yet broken that high. 2618 comes in at around 657. That would meet this downward sloping demand on a larger time frame. And then you've most recently hit the top from the low to the 236, and then the 1.13 comes in also lower again, 660, 1618. That's confluent again, 636. So these sort of levels, where it could easily break down to if it collapses, but then it looks as though short-term momentum is maybe in a bit of flux. 30-minute time frame. What's it saying yet? Right, you've held the top of the bearish control zone. I'd like to see this evolve to top side again. It's all about targeting that 236, and then maybe even on a 5-minute time frame, you're looking at an exponential moving average here, 8 exponential moving average, and try to recover that. See, now you've got your 50 simple like that back. That's interesting, right? Golden pocket retracement back above this 7.02 could be the start of it, because that would be distinctly different from all the other oscillations within this trend if it should make it back above. Well, this one had a wick there, but then a gap below, and it was so, let's see actually, and that would be confluent with 236, and then, it's like this horizontal level as well. These are the structural levels, 1618, 1313. You drop below it briefly, right? So AHT, it's at a potential inflection point, 15-minute time frame. Be a good place to pay attention to it at the 8 exponential at this stage. Just good moves, taking it back to 7.02. That would be very positive. It'd be hard pressed to see it above 7.17 in the near future. It would be the top side of a formation that likely that takes a while to break out of. Should it do so, then I would very likely see resistance at the 200 period moving average at 7.77 and then 8.18 with golden pocket retracement, and that would be defeating much of the market structure of this current channel. So seeing all of that happen in one go would be unlikely. That's what I think for EHT. And so these are the places that you want really low risk entries should price action get there. I think that eventually this is going to turn around and it'll have very positive moves to the top side, and those will be quite violent. And I think that that's partly due to the nature of the market and partly due to the nature of this particular type of asset. So thank you very much for that question from Stally, who's a freaking legend. Love you, buddy. Hope you're doing well. Interested in HT. Yeah, I think it's going to do well, right? I think it is, but that's because I'm a little bit contrarian weirdo, right? And I know that it's been hard for a lot of people who've been in it just huddling from other areas. What's PayPal doing at the minute? Still managing to hold the 50 simple and small time frames. 30 minutes, below the 50 and 200. Let's see that play out for a wee bit more. And then what the daily saying? What the daily? Still got a big area for your gap to go to. 1, 2 of them. Okay, excellent. Interesting take on PayPal at the minute here. And obviously you can see this huge bullish divergence, and if the overall market moves to the top side, that'd be interesting. That would be very interesting. Right. I've got PayPal trades on itself, a lot less than I had a while ago, but taking profits, managing portfolios, and reorganizing things for possible retests. And obviously, let risk on at the minute. Jeepers still going. Jeepers is right. What time is it? It is now 4:15. Great. And something broke. Shut up and get out of my face. That was this. It's everything. Stop everything. Later, Gator. Natural Friend. Thanks, Jamie. Have a great day. Thank you, Natural Friend. Thank you so much, Natural Friend. Coming around here, you brighten up my day with these things, and then afterwards, maybe Instagram message or whatever, just a little hi, and that's funny, and whatever, and you brighten up my day, make me feel great, and make my life good, and it's like, thanks so much, blessing, man, you're a blessing, thanks, Natural Friend. And same with everybody else who helped me today and was just here to tune as well. Cobalt Milk, that was a dead night message, thanks so much, nowhere else can I learn as much while smiling. Thanks, man. Lady, man, everybody. Natural Friend, Cobalt Mist, Komodo Dosh, and Stally. What brilliant messages. And then before we got ones that didn't come out as well, because I didn't have my thing on, because I was stupid, and it was from Justin, who's at the doctor. So positive wishes for Dustin. And then clips that I've made, but I don't know how they're working out. We'll see. Thanks so much for everybody who tuned in. And if you want to hit the like button, please do. Thanks for everybody who considers supporting the channel. All the different ways that you can. It's really appreciated. Thanks so much. And thanks for making my day so fun and enjoyable and being such a fucking fantastic group of people. Is Rocky on at the minute? You better be on it, Rocky. Better be on at the minute. This is me. I'm Tradespotting. My face is blue. Oh my God, it's all blue. Now YouTube and check if Rocky's here. Rocky, are you here? Oh, because if he is, then I can go and do a like read. Rocky Hard Croppy's not live yet. Woo, you're lucky. That means that you get to enjoy all of Rocky with the fullness of your attention. Jamie, I feel like we're close enough now where I can call you Jamie. Jam. Can I call you Jam? Yes, you can, Shadow of Lipton. You can call me anything you like, of course, and that's quite nice. Thank you very much. Dana Robertson, thanks, Jamie. Thanks, Dana. CC's Gold, thank you. Stephen K, you legend. Thank you so much. You're a legend, man. Honestly, it's all inspiring me. So you're hard workers, you're nice people, you're all trying to do a good thing, you're all trying to do good things for yourself and other people. So many, legends. Sammy, yo, thanks. Homer's Ghost, what a gentleman. Case Ever Die, how you doing? How is everybody? I gotta go. Curtis Gordon Roberts, hi Ghost, you legend. Don't forget to like this talk like I decided to. Yes, what does that mean? I understand. Not bad. Don't forget to like. How great. Everybody getting on. Badder, yo. Mohammed, yo. Everybody, yo. Do you guys hold meme stops like AMC and Jimmy? We certainly do, Mohammed. Are you guys apes? We are little bits. I was listening to my AirPods on. Thank you as always. Excellent, Rich. That's a brilliant. And then there's some ads. Thank you from Kim, Odgar, yo. Different Fish. Great to see it. Thanks so much, everybody. It's been a great stream. I'll see you over at Rocky later on. You can't be that far away, right? You can't be that far away. Also, so it's a bye from me, and it's a from Banana Yeah.